3, 2, 1. Good morning, everyone, and welcome to the City Council budget meeting, the council budget for 2022. In the chambers, we have our City Council, our Legislative Services Clerk, as well as our corporate leadership team, including, of course, our CAO, Horacio Galante. I'm going to call this meeting to order. And, of course, my e-scribe dies every time I say that. There we go. And I will turn it over to CAO Galante.
Okay. Thank you, Madam Mayor, and good morning, Council and Administration and viewers. And welcome to the December 2021 for our Budget 2022 sessions. I will provide some opening remarks, and then we will continue with our CFO that will give us more details about the agenda for today and tomorrow. So at the City of Grande Prairie Council and Administration, we take pride in our role of providing and maintaining high-quality services for our community. The services are funded in a large extent through the taxes collected from local residents that then go into providing the services and the infrastructure the community needs. In a global and historic context, originally, many years ago, councils look after basic services like roads, pathways, animal control, and garbage removal. The reality now is that the scope of services has expanded greatly. These services now include stormwater, street lighting, community and recreational buildings, development control, environmental services, social services, and also assistance to many community groups that provide valuable services to our community. In fact, our council now provides over 300 different services to the City of Grande Prairie. As the range and scope of services has dramatically increased over the years, the rates that are used to fund all this work have been maintained below inflationary levels over the last few years, as you can see on the graph on the screen. The compounding cumulative effect of inflation versus our tax rate can be seen in this chart. In order to ensure that we can continue delivering adequate services for our community in a sustainable manner, we had to be innovative and constantly look for opportunities to deliver services in an efficient and effective manner. As you all know, the COVID-19 pandemic has impacted city operations, the way we live and work, and placed significant pressure on all of us. I would like to recognize and strongly commend the entire city administration for the resiliency and hard work over the course of 2021, ensuring that the City of Grande Prairie residents continue to receive adequate services during the pandemic. The unknown duration of the pandemic has an added level of risk to all of our budgetary and inflationary assumptions. On the capital planning side, we're also facing a reduction in the MSI funding of around $4 million in 2022 and 2023, and there is no certainty at this time about funding levels, protocols, or formulas for the new local government fiscal framework that will replace MSI. At the proposed funding level, MSI is not sufficient to address the long-term infrastructure needs of many communities, including Grande Prairie. With municipal governments currently facing infrastructure deficits, we need to find alternative solutions and optimum asset management protocols to properly maintain our core infrastructure in the years to come. Another area of impact has been the reduction of the grants in place of taxes, also known as the GPOT. The provincial government reduced in 2020 the GPOT program by 25%. This revenue is normally based on property taxes that the Crown would pay if the properties were not exempt from taxation. Municipalities are still required to provide services to these properties. Also, the unionization of the RCMP has impacted our 2022 budget in about $745,000. We were very proactive over the years to plan for retropay and unionization of the RCMP. That came with a total impact of $3.8 million for the city of Grande Prairie, considering from the 2016 retropay up to date. Additionally, with new services and new facilities come greater cost. Over the past few years, we have seen additional services provided to the residents of Grande Prairie. This includes the mobile outreach services, coordinated care campus, and a new activity center, and other recreational offerings, including the Grande Prairie outdoor pool. As we look to ensure a sustainable community, we need to be mindful of what is essential to provide for our community and balance it with what would be nice to have or convenient services. What has become clear is that the expectation that Council can provide ever-expanding and diverse services is not sustainable. In the interest of providing good government, Council and administration developed a priority-based approach to budgeting for those 300 plus services, grouped in various areas. Using this analysis, the city allocates funding to those services and programs more aligned with Council's strategic vision. In February 2022, Council will develop the new strategic plan for the next 4 years, establishing what is important for the community, setting priorities for projects, programs, and services, and determining the strategic goals to be achieved over the next 4 years. CLT will then develop an operational plan to implement those strategies, and each department at the city will build their business and service plans following a cascading effect initiated by the Council strategic plan. As part of our efforts to achieve a sustainable future, administration has worked diligently to adopt innovative and more efficient ways to operate. Looking at experiences from around the world, learning and adjusting those learnings to reflect our local conditions. Our ultimate goal is to continue reducing red tape and simplifying, streamlining, and integrating systems and processes to support cost containment, to encourage more economic recovery and development, more business opportunities, and regional partnerships, while also considering the social and safety needs of our community. I personally encourage a culture of continuous improvement. And we are seeing that culture being embedded as a second nature in many employees, constantly looking for ways to do things better, differently, without fear of failure. Looking for ways to constantly improve is becoming the norm in our organization. The senior management team and myself are committed to persevere on this journey to transform and modernize the organization. We are also moving forward with the implementation of an enterprise resource planning, or ERP, unique system where more than 13 different systems and interfaces will be working seamlessly under the same umbrella software. Modules like finance, human resources, and procurement are being integrated on the first phase. As I mentioned previously, the reduction in provincial grant funding for our capital program has triggered a need to manage all municipal assets more professionally and in a more optimum way. In 2021, the city had the largest capital program investment in its history, with about $85 million. Downtown Phase 4 project at $14 million, almost 24 kilometers of road rehabilitated, 1 new bridge, 4.5 kilometers of new and rehabilitated trails that supports the connectivity of our community, the coordinated care campus, and a brand new activity and reception center, to name just a few. While all those additions and upgrades to our city assets bring added value to our community, it is important to note that the addition of assets to our overall inventory will require continued investments into the future to ensure proper asset management and maximum value. The initial deployment of a multi-year asset management plan will result in adequate life cycle analysis of all municipal physical assets. This will allow us to inject necessary capital at optimum points during the life of our assets to maximize the benefits, minimizing expensive maintenance, minimizing expensive maintenance or reconstruction, and extending the life of municipal infrastructure, both linear, like roads and underground pipes, and vertical assets, like city facilities. This is a multi-departmental effort that will pay dividends in the long term, alleviating future tax increases as infrastructure will be maintained and replaced at optimum times. Today, you will have a snapshot presentation as part of budget deliberations about our first stage of the infrastructure report, or SOIR. I encourage everyone to be mindful of our infrastructure gap as we are analyzing the best options to manage this matter in light of reduced grant funding to inject in our capital program in the years to come. Here at the city, we are strong supporters of the use of technology. Artificial intelligence and robotic applications are used more and more in city operations, equipment, and systems. We will continue exploring new sources of revenue, working in partnerships with utility companies, boards, and agencies, and our regional municipal partners. Challenging but exciting times are ahead. At the City of Grande Prairie, our goal is to deliver efficient and effective services that sustain a happy, prosperous, and healthy community. We strive to ensure that Grande Prairie continues to be a great place to live, not only for us, but also for generations to come. More importantly, we need to look beyond the short term and invest for the long-term well-being of the community. Most importantly, this will allow us to continue to live in a city where quality of life and plenty of opportunities are available to everyone. Thank you so much, and we will continue with the message from our CFO, Daniel Wiley. Thank you.
Thank you, CAO Galante, for the introduction, and good morning, Council. I'm excited to present today, along with corporate leadership, the 2022 to 2025 operating budget and the 2022 to 2026 capital budget. Many hours of analysis, collaboration, and preparation have gone into what is being presented to you today. I would like to take a quick opportunity to recognize this work by all departments and their team members. Department heads and staff whose knowledge is relied upon have committed many hours to ensure reasonable and effective budgets are being proposed, as well as the budget team within financial services who collaborate with the departments, ensure accuracy of budgets on a line-by-line basis, and who work hard to support informative decision-making throughout the process. All of this teamwork has contributed to a budget being presented today that supports efficient operations for a sustainable future in the City of Grande Prairie. Administration also sought the input of citizens of Grande Prairie throughout the preceding months and weeks, engaging residents and other stakeholders for feedback through community consultation sessions, stakeholder sessions, an online survey, Q&A forum, idea space, and the Balancing Act budgeting tool. The 2022 City of Grande Prairie budget proposes a 1.55% municipal tax increase. This reflects the cost of maintaining currently approved services, adjusted for inflation, growth, service changes, capital projects, and the impacts of COVID-19. The 2022 city operating budget outlines a total operating budget of approximately $228 million, of which $31 million is allocated to requisitions for schools, the Downtown Association, and the Grand Spirit Foundation. The operating budget outlines the cost of daily services such as transit, road maintenance, snow removal, and recreation programs. It ensures that there's enough funding for equipment operators, lifeguards, engineers, planners, firefighters, bylaw officers, and many other employees to deliver the city's programs and services. It is the financial plan that provides the foundation for the city to execute council's priorities. The capital budget makes significant investments towards facilitating and supporting growth and development within the community in roads and bridges, affordable housing, infrastructure renewal, transportation, and more. The 2022 capital budget is being proposed today at approximately $48.4 million. With the 2022 budget, the city will continue to deliver top quality services and programs to all residents and visitors alike, to keep Grande Prairie an ideal place for residents, businesses, and visitors. We have set aside today and tomorrow to deliberate on budget. Next up, we will have an economic update from our investment team at CIBC Wood Gundy, followed by another from our economic development manager, Rebecca Dodd. Afterwards, we will walk through the operating and capital budget being proposed and strategies as well, budget referrals and bylaw changes for you to decide upon. Questions, flagged items, debate, and decisions will be held until the end of administration's presentation today. So I will now turn it over to James Hobson and Sharat Kahal with CIBC Wood Gundy for their economic update.
Thanks for that update. If I could just have a moment, thanks. Thanks for your address, CAO, and Galante as well, Ms. Whiteway. I did want to mention that Councillor Bressi is joining us today, just he is online. And now we'll move on to item number 4, the economic update. So welcome, gentlemen, and good morning.
Thank you very much, and good morning, Mayor and Council. Thanks for having us here today. I know there's a few new members, so we wanted to just take a second, introduce ourselves, and then just give you a economic update, kind of go over what's happening out there in the world. And then we'll give you an quick update on how the portfolio has performed.
I just wanted to confirm before we jump in, everybody can see our screen okay?
Yeah, you bet.
Perfect. So just a little bit about us. We are the Hobson Chahal Advisory Group at CIBC Wood Gundy. So we are one of the largest institutional investment managers in the country. We currently work with 55 municipalities, other public sector institutions like school boards, charities, and insurance reciprocals. We currently manage about $2.8 billion. Now, just to go over sort of the background on what our focus is, number one is preservation of capital. So first and foremost, we're dealing with tax dollars. We can't lose it. So everything we do is fully principal guaranteed, and we're compliant with the MGA. Next, we focus on risk mitigation. So make sure our assets are diversified across different asset groups and maturity schedules. Once we're in that sort of safe box, our focus is how do we maximize our return on investment? So one of the things we'll go over today is inflation, and that is a big concern that's coming up these days, and it'll reflect in some of the information that we go over. Next, is liquidity needs. So whenever you need the money, we have to have it available for you. So we work closely with administration on managing liquidity, making sure we're balancing our short-term versus long-term investments, and making sure we have the cash available when you need it. So just jumping into our economic update. So obviously we've seen a short and sharp recession. On the left there, it shows our real GDP relative to the start of the recession. And you can see relative to the financial crisis, we've seen a very short and sharp recession. We've had a quick recovery relative to past recessions. We've seen strong recovery in both GDP and employment. So you can see on the right there, that's our employment. We are not quite back to pre-recession levels, but we have made strong steps in getting people back to work. Generally, it has been a service sector recession, and that is going to be what sort of takes us through the next leg of this recovery. Now, because of this new variant, there's a lot in the news about Omicron, so we wanted to just, revisit this. So the big question is, what is the likelihood that the new variants start to impact our hospital capacity in the context of economic activity? So vaccinations have disrupted the relationship between cases and fatalities more than between cases and the number in hospitals. So this chart here just shows you the change in the key COVID health statistics. So on the left there, it shows you that vaccinations have dropped the number in hospitals, but not nearly as much as the drop in daily fatalities. So, vaccines are going to have an impact on sort of the relationship between shutdowns and obviously our ability to continue growing the economy. So now, one of the things in Canada is that going into the recession, we had not much spare capacity in our acute care beds in our hospitals. So you can see there on the left, our spare capacity in our hospitals, very low relative to our peers. So naturally, we had a very low hospital capacity breakpoint, meaning that we had to enact shutdowns sooner than others based on the number of cases that we had. So this is something of concern with this new variant coming up. So again, relative to the US, our restrictions are relatively tight. When the hospitalizations rise, our restrictions, you can see there the black line, that is our sort of a gauge of retail and recreation mobility and how the cases lead to a lot more shutdowns here in Canada. Now, this just shows you sort of Canada's growth versus the US growth since before the pandemic. Canada is obviously recovering from a bigger hole, so we're not yet there back to where we were pre-pandemic. This is due to external trade exposures and our reliance on commodities exports. Now, even excluding those, Canada hasn't done so well, and you can see on the left there, the US is actually above their pre-pandemic trend level as they did a lot more fiscal stimulus than we did. I think this is sort of a key slide here. This shows you the growth forecast for each province for the next 2 years. Now, obviously, we've seen a quick rebound in commodity prices. Chart's going to go over that. But Alberta for 2021, we should lead the country with a growth rate of around 7.9% relative to the country at 6%. That should continue into 2022 with growth of 5.1%, which again is still above the national average of 4.2 and well ahead of all the other provinces. So things are looking good for Alberta, and Chart's going to go over that in more detail. Now, if we take a step back and look at unemployment, job gains still continue to be more modest. The key concern here is that if viruses pick up again, or if supply troubles in manufacturing persist longer, it's possible there could be a slower road to full recovery. So on the right there, it shows you provincial unemployment. Alberta is sitting at 8.5%, still elevated relative to the national average of 7.6. And then in 2022, it's going to come down a bit to 6.5, still above the national average of 5.9. So our unemployment rate is still within 1% of pre-pandemic. And that's going to lead to what I'm going to talk about next, which is what will the Bank of Canada do once that output gap is closed with respect to monetary policy. Now, this just shows you that we've had low interest rates for so long. The effective interest rate on the left of all household debt has come down significantly, which makes monetary policy more effective. So on the right there, it shows you the impact of a 100 basis point or 1% increase in the effective interest rate. Every interest rate hike is now more effective than say, post-recession. So the Bank of Canada is going to move very carefully when they do start hiking interest rates. They're watching inflation very closely, so they don't want to let that run too hot. We've got inflation posted around 3% for this year, so it is elevated, which supports our view that they will likely raise interest rates starting in the middle of next year. So that begs the question, are Canadians ready for higher interest rates? So elevated household debt does mean increased sensitivity to higher interest rates. On the left there, it shows you the breakdown of debt in Canada held by consumers. more than half is in fixed rate mortgages. So people will be a little bit insulated by, if interest rates rise, they've locked in those lower rates for their mortgages. However, almost half of the debt is still in, the distribution is in the middle there, lines of credit, installment loans, credit cards, and auto debt. So on the very right there, it shows you that the exposure in terms of total consumer loans, about half is exposed to higher interest rates. So with that in mind, moving too fast on hiking interest rates is definitely inadvisable for the Bank of Canada. We get a lot of questions about currency. So where we see this forecast, and this forecast luckily has been accurate so far. We saw we forecast the Canadian dollar to drop from around 81 cents to 77 cents by the end of 2022. Currently sitting around 78 cents. So one of the factors, there are a couple of factors that are going to impact that. We're going to raise rates at a slower pace than the U.S. Federal Reserve, which means you can earn more on your money by parking it in U.S. dollars, which decreases the desirability of our currency. Also, the rebirth of tourism will bring back Canada's trade deficit, which will weigh on our trade balance. So this just sort of talks about the impact of those rate hikes to the portfolio. So you can see there on the left, that shows you our forecast for the U.S. Federal Reserve funds rate rising up above 2% by the end of 2024. But on the right there, and you can see on our forecasts, we've got them hiking much faster than the market's priced in. On the right there, it shows you the Bank of Canada's overnight rate. We do see them hiking slowly starting in the middle of next year. But the good news is that those rate hikes are already priced into the bond market. So this is going to give us more opportunity to increase the rate of return on the portfolio over time as we can reinvest cash flow and maturities at higher interest rates. And with the goal here of sort of insulating our portfolio against inflation. So I'm going to turn it over to Chart to go through the supply chain issues we've been facing.
Thanks, James. So what I want to do now is, so James kind of gave us like the overall themes and pictures of what's kind of going on in North America, global a little bit. Now I want to talk a little bit about some key themes that we've kind of seen through this COVID pandemic. And first one is obviously supply chain disruptions. What's going on there? Commodities and commodities across the board, what's happening there? Things like ESG, that transition, the big buzzword that we keep hearing on the news. And the last word, inflation, which used to be the silent killer, but now it's on, and you can't avoid it. Inflation is high. So what's kind of going on? So what we're going to start off today is just, again, supply chain disruption. So what kind of happened? What were all the catalysts that got us to today's point? And so this kind of shows you what happened. So at the start there, the COVID-19 mitigation strategies, where we all basically got locked down in our homes at the start, reduced production of goods and services. Basically, manufacturing of goods and services fell off a cliff because there was no demand for it. Everybody was sitting at home. This resulted in a massive supply-demand imbalance, which eliminated basically all the amounts of inventory. So anybody that had excess inventories, that got drawn out, but nobody was producing more because there's so much uncertainty going back a year ago, or even a little bit like a year and a half ago when all this started. Everybody was trying to get caught up on that. Once the supply-demand imbalance happened and the economy started to open back up, a couple things happened. So obviously there's that supply chain shortage, there's that bottleneck. It's going to take some time for all that to kind of fizzle, to work its way through, and all those kinks to work its way through. However, there was other forces that made it and precipitated it to be worse. Large increase in labor demand, specifically warehouse and transportation industries. Think about truckers, barge workers, all that. There's a significant shortage there. So you got a large amount of labor demand coming in specifically for port and transportation services to feed that supply chain disruption, it's hard to find good quality work. Not a lot of people want to go back to work when, again, you have a large amount of fiscal stimulus sitting on the other side where it's kind of going, I could go back to work or I could have the fiscal stimulus sitting on the side. So you're kind of battling with that, and that creates something called wage inflation, which I'll talk to you a little bit about later. And then the log jams at the key ports compounded supply chain bottlenecks. And then I talked about the cost of shortages on materials have raised the price of the goods. And then the last is the increased commodity prices are increasing the cost of many manufacturing processes. So that adds to it. COVID created all this uptick in oil and gas and all these commodities across the board, but that increases the cost of manufacturing, which pushed downward pressure on profitability. So it's basically the perfect storm for supply chain disruption. We've seen some of the kinks start to work its way through. this is another key piece that's going to create inflation as well. And I'll kind of talk to why it's not as big of a deal looking 2023 and beyond. But so that's kind of the supply chain disruption story in a very quick nutshell. And now I'm going to focus more on the commodity side and kind of dig down from each commodity, starting with crude oil. Now, I was going to update this slide to show the current price of oil, which is currently sitting at, let's call it $65.60, where it's at right now. So we created this presentation last week. Oil is sitting around $80, and now it's $65 less than a week later. The reason that I didn't update it, it just kind of shows you the volatility that's in today's market and how overly reactive it is to this hypersensitivity of new variants that are coming out. We hear words like Omicron, which sounds crazy and deadlier than it is. We're still trying to understand what it is. But as soon as you have variants of concern, the market reacts very sharply and very quickly in the interim. However, the long-term forecast for crude, and I'll talk about this across all commodities, is still very positive and very bullish around that $80 mark for the simple forecast of any time in any economic cycle. If we look at basic economic theory for any commodities, when you have in any economic cycle a forecast for demand growth, which is what we've seen, supply falls off, demand growth starts to pick up, it makes sense that the inputs for the demand growth in any economy are going to start to pick up. So you've seen that in commodities like crude oil, you've seen it in commodities like natural gas, or you've seen that uptick as well. So this is what's created that kind of pressure from, if you guys kind of look back to the beginning of this year to where we are now, and if we look at crude oil, the catalyst at the beginning of March of 2020 to where we are today, that uptick in the rise of prices, it's that demand growth from the supply-demand imbalance that's been created. Perfect catalyst for Alberta. Very good news story. I know specifically for Grande Prairie in terms of natural gas and crude oil, oil field services, things like that start to come back online when you have stable rise in prices, which is what you want to see. Budgeting starts to come back a little bit. So that's kind of where we've gotten to today. Looking ahead, it's a little bit different. And this is where I'm going to get into things like ESG and all these things in the news and kind of hopefully give you guys a different lens to look at ESG through. So obviously with ESG, and if we look at the global climate, the reality is ESG is here and it's not going to go anywhere. So you get an increased focus on reducing emissions globally. How we get there, that's a whole different conversation. There's less likely commodity production will respond to sharply higher prices. What that means is, as the commodity prices have started to come back up, like you got oil coming back up to around $80, you have natural gas coming back up to around $4. As these commodity prices have started to run up, we haven't seen the increase in supply that usually comes with an increase in price because people are going to start to take advantage. And that's because of this whole shift in focus towards ESG. So what that means is new production growth is not going to be coming there. Why that's positive for Alberta, it means, if you guys think back to 2015, what created the crash, it was that U.S. shale imbalance that was basically cheap oil that was coming in and flooding the market. Well, that's not coming in as much and as readily and hard and as fast as it was before. So what that does is, for the existing commodities, existing production, pushes the price of those very high. So very happy for Alberta, and I'll talk about how that's really good for our Alberta budget as well. But then you got other things like carbon tax designed to incent Canadians to pare back fossil fuels. Carbon taxes it's an interesting conversation to have. Absolutely, it's designed there to pare back our fossil fuel use. But if we look at that chart below, why I included this is the chart below shows us the actual usage of different commodities in terms of what their current usage rate is. If you look at coal, oil, and natural gas, it's a very large market share of the energy production right now. So nuclear, hydro, renewables have a very long way to come before we get into what we call the energy transition. So crude oil, natural gas, coal, they're not going anywhere anytime soon because, one, the infrastructure doesn't exist to replace them, right? But at the same time, the demand for them are significantly higher as well as we do that energy transition. We're still very poised to take advantage of that here in Alberta. The one difference from a new capital budgeting perspective as well is the ESG focus in the financial markets, not necessarily from a capital budget perspective, means that investors are less willing to provide capital to fund new projects. What this means is, if you're doing an investor raise, or if you talk to any investment banker out there and you're doing a capital raise for an oil and gas company, if there is no ESG component, it's very hard to find the capital because funds, investors just want that ESG component because it's becoming such a large news headline. So they're being asked to put this in. Where oil and gas companies are starting to kind of focus their ESG mandates, you've seen things like Gibson Energy do it, one of the leaders in the industry, things like green bonds, where they'll issue green bonds where the proceeds of those bonds will go to ESG mandates. That's a way for them to kind of get within the ESG screens for a lot of these funds. So looking ahead, oil prices are going to continue to be stable. Right now, obviously, Omicron removed. Around that $70 to $80 mark is where I'd be comfortable saying that oil market is probably going to persist. Natural gas around that $4 to $5, a little bit high, but still comfortable. It's sustainable is what the big focus is. And then looking at some more of the positives in Alberta, the chart on the left, I talked about this in terms of the U.S. shale not coming back online. Well, this is the proof. If you look at where U.S. rig counts were in the U.S. versus Canada, year over year from September 2019 to September 2021, the U.S. rig counts have not come back. And that's a combination of ESG mandates coming out of the states for climate control with Biden's administration and U.S. banks just not wanting to take that risk factor coming in, because what we also have to remember is U.S. shale wasn't large mega oil and gas companies. There's a lot of mom and pop shops in there as well. And banks don't want to lend to have that risk profile anymore. So it removed a lot of production permanently from the forecast going forward as well. That's across any commodity board in the U.S. side. What's been interesting in Alberta to see, and it's a very big positive, is if we look at, Jim talked about the labor growth in Alberta and where we're leading. It's very easy to just look at Alberta and say, okay, we got labor growth coming. It's going to be things like oil field services and things like that. If we look at where the meaningful change in unemployment happened, it's actually diversified. So when we talk about diversifying our economy, it's diversified. If you look at it, the biggest gain has happened in finance, insurance, real estate. A lot of other professional services and professional service jobs are actually starting to pick up, and we're actually diversifying our economy in terms of our labor market, which is actually a very positive news cycle to see. So not less reliant on temporary employment, less boom bust. The actual diversification is starting to happen within our province, and you're going to see it in a lot of other industries. It's not here because it hasn't come into the economy yet, but like tech is coming into Alberta very strong and fast. Our Alberta government knows this. They're trying to incentivize it. It's working. We've seen some tech companies kind of pull in and do meaningful employment gains here in Alberta, so that's a very positive news story for us as well. If you guys take anything from our presentation today, this is probably the best slide to take it from. Alberta's economy should still see the biggest beat versus anybody's budget, and for one reason and one reason only: commodity prices. Right? Commodity prices are the biggest piece of our budget, and I think don't quote me on it, but obviously the forecast for the budget was not dependent on COVID. It was pre-COVID. They didn't know what oil and gas prices were going to be, but COVID providing a very positive catalyst for our oil and gas prices. We're actually going to have a very big beat in terms of the forecast versus budget in Alberta. We saw that news cycle come out a couple of days ago, just reaffirming it, which makes sense, right? When you have high oil prices, more revenues, better for the budget. Now, outside of just like oil and gas, we look at other industries as well, right? So if you would look at things like metals and lumber and all that, they're doing a lot of the heavy lifting. So metals, minerals, farm and fishing, any of our export industry, that's kind of been the biggest run-up in run-up and uptick in prices, and specifically in things like lumber and steel. If we look back to where lumber and steel have kind of peaked, I would say, obviously the prices ran very, very high, and that makes sense, right? Because at that time, again, one input into the economy as the economy's opened back up. So over the long term, you're going to have that. I talked about it in the economic cycle. When demand starts to pick up, all the input and commodity prices are going to start to pick up along with it. Demand is going to get to a point where we reach that mature phase of the business cycle. We're going to get to that mature phase of the business cycle. Demand will start to slow down, and we will see things like lumber, steel, crude oil, natural gas, all these other commodities start to kind of pare back a little bit. Now, I say this with a caveat. Lumber, steel, all these guys are going to have a short-term uptick in prices, and for one reason, this is a very micro view. The BC floods have created a large, basically a microcosm of supply chain disruptions with us in the province here of actually getting access to a lot of these lumber shortages and steels and things like that come out of BC. So with that being said, you will get a short uptick in price, not necessarily a short uptick in activity, because, again, there is no route to take. All that happens is just means the transportation cost to get it to us goes higher, which just means our net back as an individual goes higher, and the costs that would get pushed back to us are a lot higher as well. So short-term inflation on lumber, steel, commodities expected and anticipated. This kind of leads into the inflation outside of not just commodities, but inflation has been across the board. It's not just locked to commodities. You're talking everything from meat, tobacco, electricity, car, dining, hospital services, you name it. In any sector within the inflation forecast has all been impacted, and inflation is important to watch. I'll say that. Why we are not concerned is inflation, and I'll get into that as well. There's a reason why we're not concerned about inflation. The reason the market gets spooked about inflation is because of this word right here. It scares every economist out there. It scares every portfolio manager out there. Stagflation. Stagflation is a combination of two things. We're not concerned about stagflation, but I'll get into why it's a concern. It's when you get a combination of high inflation, check, we got that in the market today, combined with high unemployment, and stagnant demand. The last two key pieces of that definition are what make us less concerned, and I'll get into why. So first, let's talk a little bit about high inflation and what's kind of persisted that as well. The first one is the spike in inflation driven largely by areas impacted by this pandemic, commodity prices, things like that. If you guys remember back to 2020 when we were all stuck at home, gas prices were like 60 cents year over year. Gas prices, especially this summer, that means that year over year inflation is going to look very high because you have some transitory effects in inflation like that. There are other effects in inflation that are not transitory that are going to be persistent as well. And the way to think about inflation for everybody else, the way I would describe it is break inflation into two components, upstream inflation and downstream inflation. Upstream inflation are things like commodities, lumber, steel, crude, natural gas, that are actually good inflation. It's actually a good inflation you want to see because when inflation happens in crude, natural gas, and those industries, it actually drives things like higher incomes. It drives higher tax revenues and provincial budgets. So that's a good inflation. What you want to try and curb is downstream inflation. Downstream inflation is what all of us as average consumers know inflation and perceive inflation to be. It's why is the cost of my coffee going up? Why is the cost of when it actually impacts your life, those items, that's downstream inflation. Downstream inflation is what's spooking everybody right now, and it's for a valid point, more so in the U.S. than Canada, but it is for a valid point, right? Because when you had the energy, crude prices going up, it increases, like I said before, manufacturing prices, it increases fertilizing costs for farmers, increases food costs across the board. The way to stem downstream inflation going forward is going to be very COVID dependent. And I know everybody doesn't like to hear that because a lot of that is outside of everybody's control, but a lot of these downstream inflation factors are contingent on COVID restrictions that happen in the manufacturing process in terms of goods, not necessarily services, in things like China, where a lot of the manufacturing comes out of. China is very hypersensitive to COVID. They have a very COVID zero policy, where as soon as something happens, it feels very draconian. They shut down everything to try and stem the curve and curb COVID, which is a very good policy, but it has ripple effects in terms of supply chain shortages and things like that. So that's going to be one factor that limits the downstream inflation forecast going forward and actually curbing it. However, why we think that downstream inflation is going to start to come down naturally is, if you guys think about it, when we're all stuck in lock at home, we couldn't go out. It was the service sector recession, as James just had said. We couldn't go out. We couldn't go to the restaurants. We couldn't travel. So all of our dollars were allocated elsewhere, right? We're doing things like backyard renovations, lumber prices spiking in conjunction with that. So goods started to pick up, inflation started to pick up. But now that the economy is starting to open back up, we're going to see that overcorrection to goods start to persist back to services, which will naturally decrease the demand for goods and increase services. So we'll see that downstream inflation start to come down as well. So inflation, what that means is inflation will continue to be high, probably through a little bit into 2022, but 2023 and beyond, you're going to look back into normal inflation levels around 2%. And that's why we can look at that confidently. So inflation is one to worry and watch, but not necessarily the biggest factor that we're looking at. The one piece of inflation that we want to make sure everybody's watching, and it's an important one to watch because it's not readily tracked, but it is very important. We call it the silent killer, is wage inflation. Wage inflation in the States has been very high and is very concerning because that creates labor issues. We're entering the tightest labor market conditions since the 1950s. Canada is not the biggest concern here. As you guys can see, that it's not tracking the average hourly wage increase the U.S. has seen. That's not to say that that gap can't be closed and can't be closed quickly. It's very reactive. So it's one to watch. I would less pay attention to nominal inflation that you're seeing on the screen of the price of my to fill up in gas is very hard or anything like that. It's wage inflation is one where we as economists and portfolio managers are continuously watching in the portfolio. So from an inflation perspective, yes, it is peaking. We do anticipate it to come down in 2023. So that's the first half of the stagflation equation. The other half of the stagflation equation, which is stagnant growth, we don't see, and it's for this one slide reason. When you have a lot of fiscal stimulus that's been doled out, and this is in Canada, that means that households have increased their savings from 2022, 2021, and into 2022 by $300 billion in increase in savings. So what this means is this is how much dry powder is actually sitting on the sidelines waiting for people to stimulate the economy. So they have the cash to do it. They're just waiting for the opportunity to do it. We use it. You guys have heard us say it in the past. People are dying to go on a vacation. They're just not willing to die to go on a vacation. Things like that. We want to get back to going to restaurants. We want to get back to being able to fly and do this council update next time in person. Things like that, which actually drive meaningful growth in the economy. We have a significant amount of dry powder. So in a nutshell, a lot of volatility and variability continue to go on. 2023 and beyond are going to look very positive. The routes that we're going to take to 2023 are very unknown because it's all COVID dependent, but there is a light at the end of the tunnel in the sense of the economy is what we're going to look at. So not necessarily a big concern for us overall in the economy here in Canada. But with that being said, I will now kind of step back and what all of this and all of our forecasts have meant for the portfolio. I'll let James kind of give you an update on the portfolio.
Thanks, Gerard. So just for the new members of council here, just to give you sort of an update on how the portfolio has performed over the past couple of years. We've been managing the portfolio for 5 years now. So 2019, the returns were extremely strong, well above our expectations at north of 5%. And keep in mind, this is a 100% fixed income portfolio, so no equities in there whatsoever. 2020, the most volatile year in our careers. I certainly wouldn't want to go through that again, but despite those challenges, the portfolio still outpaced inflation significantly, delivered a return of 4.1%. Now, year to date, we've seen interest rates come up quite materially. To put it in context, the 10-year Canada bond yield went from 0.6 to 1.6, which is a pretty material move. Now, in that environment, you would expect us to actually give up some of the strong gains that we experienced in 2020 and 2019. But we're happy to report that not only did we not lose some gains, the portfolio has actually got a positive return of 1.78%. So we were able to do this working closely with administration, using techniques. I don't want to get into too much detail, things like capturing excess capital gains to boost our annual investment revenues. So if we look back in a nutshell over the full 5-year period, the portfolio delivered a return of 3% per year. And obviously that was significantly higher than the average yield on bonds through that period. It was a relatively low interest rate period. So that's an update on the portfolio. We are outpacing inflation, and with interest rates set to continue to rise in the next couple of years, the return should follow in line with that. So it's a good outlook for the investment.
And then just to add to what James is saying, he kind of alluded to it a little bit, but I'd be remiss not to make sure I shouted out administration myself as well. You kind of saw it with your guys' capital plan at the start of this presentation as well, but the responsiveness that the administration has given us has allowed us to be a lot more nimble and a lot more, I want to say, responsive to the markets, which is why it's not just us, it's what the administration has been able to provide us as well that allows us to capture gains like this as well. Now, with that, we'll pass it over to you guys for questions if you have any.
Perfect. Thank you for that. So, as usual, thank you so much for your very thorough report. I will open up to questions from council. I see Councillor Bressie in the queue first, and the rest of council in the chambers, if you could use your in the queue pad. Perfect. So, Councillor Bressie.
Great. Thank you, Mayor Clayton. Thank you, gentlemen. It's always an interesting part of our budget deliberations, getting to hear from you. So always appreciate it and look forward to having you in chambers in person next year. I'm curious, you talked a little bit about supply chains and what that was doing, but I heard you mostly talking about the COVID and the longer-term impacts we're having. Could you tell me if you've got any thoughts on what we're seeing in the Lower Mainland right now and how big that'll might impact us up here?
Yeah, absolutely. So I alluded to it a little bit. And so what those short-term disruptions are going to do specifically with that Lower Mainland, the floods that brutalized a lot of that Lower Mainland, the transportation routes to get to a lot of the economy in the Western Canada, Alberta, and beyond, they're still going to get here. They're just going to find a different route, right? So they're going to find a different route, which is just going to increase the cost of transportation. When that increase in cost of transportation happens, we call it a net back, but that's the all associated cost of getting whatever commodity is to market. When that happens, all that does is the costs get pushed back to consumer. So you're going to see all those costs kind of increase. And the reality is they're going to increase and then they're going to stabilize by just that increased amount of transportation. It shouldn't go beyond that because all the market's going to adjust for is, let's say, it's a couple of dollars more per kilometer to go south and then come back up. That's the bottleneck that they need to alleviate, which is very easy, right? You're not waiting for them to build the road. You just take a different route. But that's going to persist until that infrastructure comes back that allows us that access to come back as well, right? So until those until those roads come back and until meaningful flow happens, it's going to, I said because of COVID's the exact same story, right? Because it created this bottleneck that basically it cascaded every supply chain effect along the way. The Lower Mainland is no different. Decimating roads is now creating a cascade effect along the entire downstream. So they're starting to adjust, finding different markets. All it unfortunately means for us is higher costs until that infrastructure and transportation comes back. Because we all know no company is just going to eat that cost themselves.
Right. And are we seeing the disadvantage we have being north is it's further to get to us from the Lower Mainland. The advantage we have is we're closer to Prince Rupert. Are we seeing traffic move to Prince Rupert that would be coming to the Lower Mainland, or is it all just still coming through the Lower Mainland?
I don't want to speak out of turn here. I haven't looked at that data specifically. However, I would say if there's demand, market will find demand. So if there's a cheaper transport route, they'll take it, right? So I would say if there's demand there, then the market will naturally correct to take that route.
Great. Thank you.
Yeah.
Thanks, Councillor Bressy. Councillor Blackmore.
So I have a couple questions, and the first one is to do with, I believe that there has been a significant reduction in upstream oil and gas exploration in Canada and around the world over the last few years. And I'm wondering how that's going to line up in your predictions for versus the current storage and production capabilities of the world. It seems to me that the industry is indicating that those storage and production potential has been seriously reduced. And I'm wondering how you think that'll affect our exploration potential in Alberta versus the fact that we see a lot of hostility taking place around China, and there's a significant number of people who are suggesting that we're looking at a war, which will suck back a tremendous amount of oil and gas. I'm just wondering if you put that into your, if you thought about that while you're putting together your thing for us today. Presentation, sorry.
Yeah, no worries. So absolutely great question. I would say a lot of that is built into the forecast. When we do forecasts, we'll always look at a couple things, not only just the expected increase in demand, but the expected decrease in supply. I touched on it a little bit. We see meaningful supply production coming off in the States. We do see, I didn't touch on it a little bit, and I apologize for that in terms of the production growth in terms of new capital expenditures coming off in North America. Without getting too technical, what that's essentially done is we've seen Suncor do a little bit. They've held on to so much cash for so long because they're not spending all of their money on capital budgeting and capital projects that it's coming back to shareholders and in other ways in terms of dividends and buybacks, but that's beside the point. What you're alluding to is that in the forecast? Absolutely, it's in our forecast. The biggest run-up from the collapse in, I'm not going to say COVID because COVID, if we remove COVID, but that $27 mark, the biggest run-up to get to the $80 is the large supply-demand imbalance that happened in terms of the global economy. So what you allude to from the Chinese perspective, that's not in the forecast yet because that's a large unknown. It's hard to build unknowns into the forecast. But if we take into account factors like the knowns, like the forecast in North America and the U.S., that's where our forecasts come from. So yes, that is built in.
Great. Thanks, Councillor Blackmore. Councillor Thiessen.
Thank you very much, Mayor Clayton. And thank you very much again, gentlemen, for coming on in and giving this presentation for us before budget. I have actually two questions. So the first question I have is in regards to consumer prices. So when Councillor Brescia asked you about the disruptions to the supply chain in the Lower Mainland, we're also talking about disruptions on the East Coast as well, in Nova Scotia, Newfoundland, as well as south of the border along the ports in California. Now, typically, historically, we see inflation, and as far as the consumer goes, they never usually see their prices go down. We can look at the volatility of oil over the last decade and a half for that point. Do you feel that once all these supply disruptions are remedied, that we'll actually see deflation for consumers, where they'll have the cost of goods will be affordable and not inflated as they are in this time of crisis?
So two great questions there, two sides to that, and James, feel free to add as well. I wouldn't use the word deflation. I would go as far as saying the long-term healthy inflation number that you want to see to stimulate economies is 2%. That's like every economist's golden standard, and every Fed and U.S. bank reserves, like golden standards, what they aim for is 2% inflation to get that healthy growth. 2023 and beyond, absolutely. Once we get through these supply chain bottlenecks, we're going to see that 2% inflation. I personally wouldn't use the word deflation to kind of get it as a reset. I would say it's going to spike and then sit back at that 2% number. James, do you agree? Or, yeah.
Okay. And just one more question. Thank you very much. Thanks for answering that. That's what I figured. It'll correct, but the price will still stay higher than what it was. So my other question is lately in the news, there's been lots of talk about digital currencies being released by central bank systems. And over the last 2 weeks, it seemed almost synchronistic that 17 different countries have started unveiling their plans for their own central bank digital currencies off the back of the e-yuan in China. What kind of impacts is that going to have on the Canadian dollar, Canadian banking system, and impact on consumers such as the City of Grande Prairie?
So I would say a great question and very topical. I would say it's yet to be seen. The major Canadian banks have steered clear thus far of, say, offering digital currency bank accounts, things like that, or offering payment systems in digital currencies thus far. The main concern right now is money laundering, and it's just the banks they have very strict policies around money laundering and anti-terrorist financing. So I think, to your point, it is something that's coming. In terms of payment systems for the city itself, right now we view it as just too volatile. So that has been the biggest downfall of digital currencies so far, is it's very difficult to predict the prices. It's far less stable, right? You see the price fluctuating by 10, 20% in any given month, versus the Canadian dollar might drift, say, for example, from 80 cents to 78 cents over the course of a year or two. So I think it's something that is coming. It's just early stages right now.
Just to add to what James is saying as well. So it's a double-sided blade there, right? Because on one side, yes, digital currencies are going to exist. What I would focus on is less so about the digital currency itself, is the blockchain technology. That's what's going to be coming, and which is very important, right? So the blockchain technology is what's causing all the hoopla behind everything. But James touched on it. The transparency is just not there behind the currencies yet, right? The regulators are trying to figure out what to do. Again, it's a lagged effect. The technology is going to come in one fashion we have yet to see.
No, thank you for that, gentlemen. Yeah, China said that they're doing a full launch of their digital currency as of February 2022 in line with the Olympics. So maybe something we want to keep our finger on the pulse of going forward. Thank you.
Thanks, Councillor Thiessen. Councillor Lerners. Been away for a bit. I forgot how to pronounce your name.
Yeah, forgot my name. Sounds like my wife. Well, we're not married. Thank you. That was a great presentation. I'm going to try and bring it a little bit closer to home because I'm a newbie and I just want to get a bit of an understanding. So you guys are obviously handling accounts across the country for towns bigger and smaller than us. From your perspective, what's our risk profile or acceptance? Are you consider us a little more aggressive or more conservative than the average municipality?
So great question. So we, like you mentioned, we do manage numerous accounts, about 55. The reality here is that we are bound by the MGA, the Municipal Government Act, Section 250. So that basically restricts us to principal guaranteed investments by either the Canadian government, the provincial governments, or the charter banks. So in terms of how aggressive we're being, I wouldn't use the word aggressive. I would say optimized. So the best way we can keep the returns high is to manage our liquidity needs. So how much do we have in longer-term investments versus shorter-term investments? Right now, the longer you invest for, the longer term you take, the higher the rates are going to be on your investments. So if you keep a lot of money in cash, you're actually losing money due to inflation. So I think the city's done a really good job of managing liquidity, not sitting on too much cash, because if you're sitting on too much cash, your purchasing power is just eroding over time. It's going to make it difficult to keep up with, capital projects, things like that. So, I think in the scope of things, the portfolio is optimized and it's in line with, say, the other 11 cities we work with.
Okay. And the second question then is just, so when you're working with these other municipalities, is there something that you can think of that they're doing that we're not doing, and or are we kind of leading edge, I guess? I'll give you the two extremes.
Great question. I would actually answer that with a reverse. When we get asked by other councillors in other towns, municipalities, cities, what they should be doing, there's a handful of institutions, City, Grande Prairie would be one of them, that we would use as an example for what they're supposed to do. And that term goes into the conversation of what we work with in administration. James touched on it. Yeah, we work with your administration quite a bit to understand you guys' liquidity needs, cash flow forecasting, projections, things like that. So when you talk about specifically what is the administration doing, we, from a cash flow perspective, we know exactly what's going to line up from maturities, liabilities. So every dollar gets optimized from that perspective. So it's less so what can we be doing that somebody else is doing. It's City of Grande Prairie gets utilized in a lot of our presentations as what you guys should be doing, because this is what it can turn out for. And you guys can see it in your guys' performance, right? Because if I told you that you guys are going to get 5% on a all bond portfolio that's not taking risk, that's a very great number. And that comes because of things like optimizing portfolios in terms of liquidity.
Yeah, I would say the less optimized, we'll call it, municipalities will be the ones that sit on a ton of cash, or they view the longest term they'll go out as maybe 1 or 2 years in investments, which over the last couple of years would keep your rate of return sub 1.5%, sub 1% in a lot of cases. So you're not keeping up with inflation. The best municipalities, we would use Grande Prairie as an example, other larger ones that are, say, north of 100 million, where we can take advantage of what we call crystallizing excess capital gains. So we'll have a budgeted number where we can say, okay, this is the forecasted fixed return that we can rely on. But then our job is to work with administration throughout the year on identifying opportunities to crystallize excess gains to boost that annual investment revenue for you.
Great. Good to hear. Thank you.
Thanks, Councillor Lanners. Councillor O'Toole.
Thank you very much, Mayor Clayton, and welcome, gentlemen. I've just got a couple of questions. I don't know if you're going to be able to answer them, but I wouldn't mind some of your reactions. We got Joe Biden down in the United States, and I was wondering what you feel our Canada-U.S. relationships are going to be and how it'll affect the NAFTA. I know it's not that anymore, but we've got items like automobile parts and aluminum, steel, wood, and pipelines. How do you think our relationship with the United States is going to bear out over the next 4 years?
Yeah, really good question, Councillor. I would say, and James can add to this as well, the one interesting difference between old administration and the new presidential administration in the States is it was very much an America First mentality that we didn't think was going to persist. But Joe Biden has actually taken that over and said, okay, America First policies, which not a lot of people saw, which unfortunately creates, I would say, I don't want to say large disruptions, but a little bit more, not less so on the same page in terms of with Canada, in terms of NAFTA negotiations like that. Steel, lumber, you kind of alluded to it there. Making sure that America First mentality, he's just kind of piggybacking on the old administration to kind of get that pushed. The biggest thing, and I touched on it, is going to be ESG, climate change. You have a very clear focus of ESG on both sides of the border, and what that is going to do, and I touched on it as well, is that transition is going to happen. It's not an overnight transition. We're talking years upon years upon years about this transition. However, the regular, I want to say, players of commodities that are in there are still going to make up a large amount of the economy, because the reality is there's not enough output from the other side to even make up for it. So yes, ESG is going to be a focus. Yes, both administrations are going to work together to get this climate change thing going. However, the reality is the production's not there to offset it. So I wouldn't say it's a big worry even within the next half decade.
Yeah, just to add to that, I mean, we saw it as soon as Biden was elected. I think within the first week, he just canceled Keystone XL. So he's going to be, let's say, not supportive of the types of industries that Alberta is perhaps focused on.
Well, thank you very much for your perspectives. And yes, I did have American First written on my notes here too. So thanks for bringing that up.
Yeah.
Thanks, Councillor O'Toole. I'm just going to put CAO Galante in the queue next.
Thank you. Thank you for the presentation, gentlemen. I have a quick question about what you mentioned about capital gains. So when do you see the next significant crystallization of the capital gains and a tentative amount?
So the amounts is going to be very difficult to forecast. By definition, they are excess returns above and beyond what we would expect from regular just holding a bond to maturity. What I will say is, not to get too technical, but when the yield curve is positively sloped, we can almost always crystallize excess capital gains. The city's in a very enviable position in that the portfolio has been set up for a number of years now. So over time, what happens is, as the bonds approach maturity, our bonds start to look really attractive relative to what's available in the market. So really simple example, if we buy a 3-year bond at 3%, 1 year from now, it's still at 3%, but a 2-year investment might only be at 2%. So we have an investment that's going to increase in price, and we monitor things daily. And as soon as it looks attractive, we will sell the bonds prior to maturity. We almost never hold bonds to maturity, and then we reinvest them at higher rates. So it's a difficult question to answer.
Yeah, no, James kind of gave you the details behind it, but if you were kind of try and peg us, like you said, it's, by definition, it's unexpected returns above and beyond what we're already forecasting. So it's hard to put that in. However, I will say, please don't anchor us to like a 5% rate of return in the portfolio. That's going to be very hard to do going forward, especially when interest rates have come down quite a bit. So we are going to see returns excess and above and beyond, but just don't anchor us to that 5%, because I don't want us next year to be going, okay, where's that 5% on the bond portfolio? It'll be meaningful, but not in the 5-6% range that we're used to, because interest rates kind of fall off a cliff through COVID.
But I will say just lastly that with our forecast for interest rates, we should be able to maintain the purchasing power for the city, outpace inflation as we have over the last 5 years. That's our primary goal.
Absolutely.
Great, thank you for that. Councillor Berg.
Yeah, thanks, Mayor Clayton. Thanks, gentlemen. So my question, I guess, is we looked at Canada versus U.S. in the economy. We compared Alberta to the rest of Canada in the economy. Have you guys taken a glance or a look at Grande Prairie versus the rest of Alberta or Canada on a micro level? What do you guys see for the local economy for us?
We had that data last year, and I apologize. We'll make sure we put it in for next year. I don't have the data. Do you?
No, so I don't have the data, but I can give you kind of the Coles notes on the high level, what our thoughts are for like the peeling back a layer and going further to City of Grande Prairie. But for the City of Grande Prairie specifically, when you get this rise in prices, natural gas and crude oil, it's the perfect storm, because oil field services should start to pick back up on existing production, and you guys will start to get that meaningful employment and growth come back into the economy as well. So whatever we're saying for Alberta, any of the cities, any of the towns and municipalities that are more focused in those sectors are going to obviously be painted in a higher light. And City of Grande Prairie is one of the ones that will be painted higher, because the employment that's coming back, like I said, is not going to be to oil and gas professional services jobs like here in Calgary, it's going to be directly at source. So you guys are going to be poised to benefit from that a lot more than a lot of the other rural municipalities around you guys.
Thank you.
Councillor Thiessen.
Thank you very much, Mayor Clayton, and thank you again, gentlemen. This is honestly my last question. So this is in regards to our investment portfolio, and I just keep thinking back to that chart that you guys showed where you had coal and gas at the front, and then you had the sloping upwards of the renewables. So recently I was talking with the president of ACCO, and she said that she doesn't foresee a lot of growth in the coal and gas market. Potentially gas will hang on for a while, but she said that ACCO sold all their interest in coal and are now focusing on electricity derived from solar, wind, and hydrogen technologies. As far as our investments go, where do we see, considering the volatility of oil and it seems like a shift away from coal, on the potential for growth in our investments in renewable energy sources as a means to, I guess, financial productivity through these investments?
So great question, and it's very topical. So there's a lot of talk. We keep coming back to it on ESG, so environment, social governance. We are exploring opportunities to tie our investment returns to the performance of ESG mandates. So it is something we're looking at. Historically speaking, though, the returns available just haven't been as attractive as what we've been able to earn on what we currently have in the portfolio. But yeah, it is something we're looking at for sure.
Yeah, so just to kind of give you that, I'll give you two sides of that, just to build on what James said. Our prudence is always to get you guys the best rate of return. That's where our duty of care is always owed. So we can definitely go out there and buy a green bond that has renewables tied to it. But if the yield is going to be 1% less than just a regular bank bonds aren't like, we're not buying oil and gas bonds. We're not buying non-ESG bonds. So it's not like we're being punitive in terms of ESG. We're still in line with a lot of ESG mandates. It's just, we're going to be giving up too much rate of return. We're not being compensated enough. We're actually being detrimental compensated for taking ESG mandates. For you guys specifically, if I compare it another way, less so from a portfolio management perspective, from a city portfolio financials and economic growth perspective, the growth is not going to be necessarily like those type of renewables. You're going to look at like hydrogen, carbon capture. You've seen a lot of the companies, that's where they're putting a lot of their capital budgeting projects to, and that's where you guys can see a lot of that growth, specifically in terms of your guys' individual portfolio.
Awesome. Thanks for that explanation, gentlemen. Appreciate it.
Councillor Bosch.
Thank you for the presentation. It was fantastic. I did learn a lot. One question I have is on your wage inflation information. Do we have any idea in our area? Is there any data on the shortages of labor in our area or Alberta as a whole? And if we could go, into our area predominantly. Do you have a forecast?
Yes, and great question. So the forecast is that labor conditions are going to remain tight in Alberta. So we're actually seeing for the first time in a while, there's more job vacancies than there are people to fill those jobs. So Alberta should see relatively elevated wage inflation relative to the rest of the country, just based on the local data. In terms of wage inflation in Grande Prairie, I think it's just going to be completely in line with the overall province. You're going to have the same issues of public sector employees competing with the private sector. We're seeing wages for new hires start to compete with one another in different industries. So the bottom line is it's just going to be more difficult to attract and retain talent on the workforce.
So to add to that, do you see labor coming from Eastern Canada again? Because they all went home with COVID.
So the biggest driver has actually been a drop in immigration. So through COVID, we had less people moving here to fill jobs. So that naturally put a drag on the labor participation rate, we'd call it.
Okay, thank you.
Thanks for that, gentlemen. I don't see anyone else in the queue, so I appreciate your time today. And as always, very informative. And we'll see you again soon. As Councillor Bressie mentioned, hopefully in person next year.
We'll make sure of it. Thank you very much.
Have a good day.
Thanks, guys.
All right, moving on to item number 5, the macroeconomic update from Ms. Dodd.
Today and hopefully take some of the information.
Is
it on? Oh, there
it is, yeah.
Thank you. Sorry, good morning. Thank you for having me. I'm happy to be here and hopefully build upon some of the information that CIBC presented for us this morning. My goal today is just to provide an overview of some of the major economic indicators that we keep an eye on throughout the year, drilling into some of those more specific data sets and providing council just an overview of where things are looking at the end of 2021 and as we move into 2022. I will then sort of review a number of the major projects that we see happening within the region that have the potential to drive further economic activity, and then close out with a bit of a summary of what we're hearing from our local businesses. This slide probably looks fairly familiar to a number of council members, but I just wanted to take a quick second and sort of set the baseline for a number of the statistics that we're looking at today. So the city of Grande Prairie has a population of just over 69,000. We have been very fortunate with steady high rates of growth throughout our history. We realized an annual population growth rate of 3.69 between 2000 and 2018. And we are a young, vibrant community, as we like to tell everybody, with a median age of 31.9. So in July, the province released population projections for the census divisions. This is not a totally focused-in look at the city. The census division includes the city, the county, all of the towns and villages within their borders, and reaches out to Peace River, Fairview, Spirit River. So it's quite a broad area. It encompasses a number of areas that have an older demographic generally and see slower rates of growth than we do within the city. However, within that study, the province did predict that the city, or our census division, is predicted to be the third fastest growing across Alberta, just behind Calgary and Edmonton, predicting an average annual growth rate of 1.59% annually between now and 2046. Just to provide a little bit of context to that, according to the projections, they are estimating that our current census division currently has approximately 128,000 people, with prediction to grow to 193,000 by 2046. In terms of population growth rate, in terms of population growth and the components of population growth, the data that we receive from StatsCan is looked at from a July to June time period. So the most recent data that we have available captures up until July 2020. As you can see through the center there, that blue line is our strong natural population growth rate. So that's the net natural population growth. And we typically see over 1,000 births a year, between 1,000 to 1,500 generally. And this has remained really strong throughout most recent history. International migration is the green bar that you see along the top there. We consistently see between 700 to 1,000 net immigrants coming to our community each year. Because of the time frame that this data is looking at, we won't see the real impacts of that green bar as a result of COVID-19 until I'm sitting in front of you next year. So something to keep in mind as we are looking forward. Interprovincial migration, you can see through the last couple of years, has dipped into a negative migration between the provinces. Last year, we lost a net 104 people overall to interprovincial migration. And this is not unique to Grande Prairie. It is something that we're starting to see more and more across the data sets in Alberta. And in terms of intra-provincial migration, so people moving within the province, we typically lose more people than we gain from other parts of Alberta, with one exception in 2017-2018. So last year, according to the data, we lost 412 people. Historically, when we dig into this a little bit further, we see it's really between that 18 to 30-year-old, and typically tends to skew more female. And so overall, last year, we saw a net gain of 744 people, down slightly from the previous year, which saw a net increase of 912. The screen here shows our unemployment rate. Anybody that's heard me speak before has probably heard me mention the problems that we have with this data. The unemployment and employment data that we have is reported for our economic region, which is essentially all of Western Alberta. It captures Banff, Jasper, Athabasca, Rocky Mountain House, a number of communities with very diverse and different labor force needs and labor force trends. So it's not a pure representation of what's really happening within the city, but it is a good indicator of sort of our broader economic region. As you can see, in October 2021, our unemployment rate remained consistent at 7.1%. This is down from October of 2020, where we reached 10.9. Provincially, the unemployment rate saw a decrease from 8.4% to 7.7% in October. Within our economic region, you can see the labor force there. We did lose approximately 27,000 people who were previously employed that have since left the labor force, according to the statistics. Moving into some of our residential and building activities here. So in terms of residential sales, year to date, as of October, we have seen 1,220 sales within the city. This is up 28% from the same time last year, which saw 954, and 2% above where we were sitting this time in 2019. Year to date, the average sale price, including both new builds and resale, is approximately $316,822. It's very consistent with where we've seen prices over the last number of years. We generally only see fluctuation of approximately 1% from year to year. Year to date, we have seen 108 residential starts. It's a 14.9% increase over 2020. I will dive into this data a little bit further on the next slide, but I did want to just highlight the rental vacancy data below. The rental vacancy data that we have comes from the CMHC Rental Market Survey. It's a single point-in-time count. So the counts are conducted in October of each year, and the information is generally released by July. Because of the nature of the data, it does also have some challenges in that it really only captures one point in time and doesn't give us a good indication of the trends or what we're seeing in the market. You can see here, as of in October 2020, CMHC is estimating our vacancy rate to be 10.7%. The other challenge with this data is they're looking at apartment buildings, largely 3 units or more. So it doesn't capture the large secondary suite market and single-family homes that are available for rental within the market. We did do a survey this week and spoke to a number of the local property managers just to get a sense of what they were hearing. We heard a big range of responses from one company who had less than 1% vacancy, only had 1 or 2 units left available, and on the higher end, we heard up to 30% vacancy. When we took the responses, it averaged out to about 13%. We did hear some really good stories, some really interesting anecdotes through this exercise. We're starting to see an increase of residents or new residents who own homes elsewhere that are moving to the city and occupying rentals, indicating that Grande Prairie and the job opportunities that they have here are making it worthwhile to finance a second resident in Grande Prairie. So now the challenge, I guess, will be to convert them into permanent residents. We're also hearing a number of stories about nurses and other medical professionals relocating to the area. This is, it seemed from chatting with the companies locally, this almost seems to be within just the last couple of months, there's been a noticeable increase of nurses and other medical staff relocating. So that was really encouraging to hear. So going back to the residential starts, again, this is based on the CMHC data. So this data is calculated once they start to see that vertical construction. It's visible in the ground, which would explain why it doesn't always line up perfectly with the building permit data. Year to date, we have seen 71 single-family starts and 37 multifamily starts. It's a 14.9% increase from last year's 60 and 34, respectively. Of those multifamily starts, the CMHC is reporting 12 semi-detached, 6-row, and 19 apartments. I do like to show this slide as opposed to the chart on the previous slide, just because it shows the trend line over the last number of years, and you can really get a sense of activity. So as I mentioned, the building start data doesn't always necessarily directly correlate with our building permit data, but building permits are a really good indicator for economic health. They are a leading indicator and give a good indication of intent. So I will take a look, walk council through this data two ways here. This here shows the building permit data in terms of volume. So you can see the residential permits form the vast majority of the permits issued each year. But when we take a look at the building permits in terms of their value, you can see that the commercial, the gold bar along the bottom, takes up a big chunk of the value that we're seeing from our building permits. So year to date, 557 building permits worth over 76 million have been issued, compared to 591 permits worth just over 69 millions for the same period in 2020. So this is a 5% decrease in permit volume, but it represents a 9% increase in terms of construction value. We have seen a relatively strong commercial permits with $39.8 million year to date this year. That would incorporate a lot of the commercial development happening on the east side of the city, as well as significant renovations to the Southview Safeway, and a number of tenant improvements and other commercial properties improvements throughout the city. So taking a step back from residential and taking a look at our energy sector, as was highlighted in the previous presentation, energy is an important driver for our local economy, and it's one of the easiest ones for us to track in terms of our permits, or in terms of data points to actually take a look at. So well licenses, similar to the building permits, is a great indicator, a leading indicator of intent. Year to date, in 2021, we've seen 616 drilling licenses issued within the Grande Prairie region so far. This is compared to 314 in 2020, which is an increase of 96%. Of the licenses issued to date, 237 are for oil, 370 for gas, and 9 for other industry-related wells. This is compared to 101 for oil, 206 for gas, and 7 for other industry wells. Other industry-related wells for the same period in 2020. This chart here has a lot of data, but it is a snapshot of the region's top producers. Typically, I only look at the most recent year for comparison, but in this case, we felt it was worthwhile to show a little bit of a perspective and include 2019. So this takes a look at the top 10 producers from the past 3 years. As I'm sure many of you are aware, there's been a number of mergers and acquisitions within the region, most notably the ARC Resources and Seven Generations merger. So the 2021 data with the 99 well licenses attributed to ARC Resources, that's everything that was pulled by Seven Generations prior to the merger, and ARC Resources under their new name and position. Last year, when I reported on this data, I spoke a little bit about CNRL and their acquisitions in the BC Montney, as well as Tourmaline and their acquisition of Jupiter Resources and Modern Resources, which were 2 of Grande Prairie's top 20 resources, or top 20 producers. And I spoke a little bit how we would likely see Tourmaline start to move up within those well licenses counts. And so you can see in 2021, they pulled 35 well licenses up from the 12 in 2020. So similar to the building permits versus housing starts, drilling completions really are the truth tellers. So they show where the activity has actually happened. And year-to-date completions are up 82%, with 635 completions to date in 2021, compared to 369 for the same period in 2020. We also are sitting 36% above the same period in 2019. So this slide, again, there's a lot of information here, but every year in preparation for this, we like to do a little bit of a tabletop exercise, taking a look at all of the major projects that are either planned or in progress within the broader Grande Prairie or economic region. This information here is largely pulled from the Alberta Major Projects database. Some of the valuations on here are a little bit out of date, but we do really tend to rely on what the province is reporting in terms of the valuation and the project progress. The main point of this slide here is to highlight the $12 billion of planned and proposed projects. Typically, when we're pulling this number, we're seeing between 8 and 9 billion, but to see the jump to 12 this year is an impressive number. And this is a combination of energy projects, recent announcements with the petrochemical development in the MD of Greenview, as well as government provincial infrastructure projects such as the Highway 40 twinning. I should also mention a number of these projects, are pipeline projects. So those are very regional projects. It's not to suggest that the full $2.3 billion of the NGTL project is happening directly within Grande Prairie, but those are key pieces of infrastructure to ensure that we're connected to the Edmonton region and to support our local economy and support those well licenses and employment within drilling and energy activity. So I will just dive into a couple of the projects. I've sort of picked and choose a few for Council's information this morning. But Nautical Energy is a project we're very excited about. It is a $4 billion carbon neutral blue methanol facility planned for just south of the city in the county of Grande Prairie. They are estimating construction to begin by the end of 2022, 2023, and have a target of being fully operational by 2028. They have divided the project out as it has expanded in scope and built in 2 phases. So they are anticipating both phases to be fully operational by 2028. This project represents 5,000 construction jobs provincially. That includes 3,000 directly through the engineering, fabrication, and construction, plus an additional 2,000 indirect construction jobs through upstream gas producers and local services that will largely be located within the Grande Prairie region. It is also anticipated to support 250 direct operating jobs on site within their offices and within the facility, in addition to 1,000 indirect jobs through spin-off services and support services. Our newest announcement, the Northern Petrochemical Corporation, has announced a $2.5 billion facility for the MD of Greenview, located within the Greenview Industrial Gateway. They're also anticipated to begin construction 2023 with a target operation fully operational by 2027. They are anticipating 4,000 construction jobs and 400 operating jobs. This is an exciting development for the region with global methanol demand increasing. There's been a number of predictions around the number of methanol facilities that Grande Prairie could feasibly support through our feedstock and our resources. And so we would expect to, where we see 1 methanol plant, we see 2, we see 3. Generally, we would anticipate in sort of that longer term forecast to see 4 to 5 methanol plants within the region. So that's 4 to 5, $2 to $4 billion investments with thousands of construction jobs and hundreds of operating jobs. So this is exciting to see a second announcement and start to build out this cluster within the region. So I did mention the Greenview Industrial Gateway. A number of council was able to join for the announcement and the event that we attended a few weeks ago. The Greenview Industrial Gateway it's planned to be a world-class eco-industrial park, the center for natural gas processing in Canada. It is located 40 kilometers south of the city in the MD of Greenview and is approximately 32,000 hectares. The goal of the project is to reduce barriers to large-scale industrial development. Nautical and NPC are examples of the types of projects that we would expect to see attracted to this region, so that larger scale heavy industrial uses. This district provides the advantage of providing pre-planning for infrastructure utility corridors and helping to reduce some of those barriers to this large scale type of development, and positioned to compete with other heavy industrial parks such as the Alberta Industrial Heartland in the Edmonton area. Of course, my favorite project that I get asked about every presentation, the Grande Prairie Regional Hospital. We're very excited to see it opening this weekend. This is a huge opportunity for the Grande Prairie region, for the city specifically, but for the region as a whole. It will bring 234 new beds, 2 radiation vaults, bringing radiation and chemotherapy to Grande Prairie as the 5th city in Alberta to offer these services and ensure our residents aren't needing to travel to Edmonton or elsewhere for treatment. But it also opens up new opportunities for businesses and support services and those ancillary services required in order to support bringing new specialties to the region. The hospital also has 43,000 square feet dedicated for GPRC programming. This is a combination of teaching classrooms and the Ivaskovich Center for Health and Innovation. The job numbers, the hospital itself is expected to employ 1,500 people. Previous estimates that we had were estimated net new jobs of around 756. Those would be a combination of specialists, MDs, hospital staff, nurses, and healthcare professionals. And finally, I do always like to highlight Alberta infrastructure, provincial projects such as the new composite high school replacement and the O'Brien Lake West School build. These are an indication of the strong growth that we see within the region, that strong population growth rates that I mentioned previously, and investments of $60 million and $36 million respectively into our community to ensure its continued growth. Before I wrap up, I did want to highlight Small Business Week. So Small Business Week typically occurs the second week of October each year. In 2020, we were able to join council and do a bit of a Small Business Week blitz where we went out and interviewed businesses and stopped in just to do a touch base and collect a little bit of data that we're able to start to form some metrics to report on each year. This year, obviously, Small Business Week looked a little bit different. So rather than doing a business walk, we had our business retention and expansion coordinator conducting phone surveys and reaching out to businesses just to touch in, say hi, see how things were going, and to ask a couple of quick questions. So one of the questions that we asked was, how would you rate the city of Grande Prairie as a place to do business? Our business retention expansion coordinator connected with 70 businesses and was able to successfully complete 62 surveys. So when they asked to rate the city of Grande Prairie as a place to do business, 78% rated Grande Prairie as an 8 or higher, which is a slight increase from the 74% that we saw with the same ratings from last year. As a follow-up, as a follow-up question, we had then asked, how has this changed over the past year? 3% said more negative, 65% said about the same, 24% said more positive. In terms of the comparison to last year, this is a slight improvement. Last year, 8% said more negative, 60% said the same, and 32% said more positive. And new this year, we added a new question, just asking about their plans for expansion. Were they planning on closing or reducing the size of their operation, staying the same, or expanding? And 36% of the businesses said that they were, 36 businesses of the 62 surveyed said that they were planning to expand in either their footprint, their staffing levels, or their services that they offer. Generally, we were hearing really positive feedback from businesses who were looking for opportunities to expand, take advantage of some of the economic uptick and sense of optimism that we're starting to hear within the business community. And finally, our last question was, what can the city do to help improve business conditions? On here's a really busy slide, but we tried to capture the major themes that we heard coming out of business owners. Some of the typical answers are there around crime, taxes, and red tape. But honestly, the biggest themes that we heard around was support for advertising, getting the word out, small business highlights, and that storytelling piece. We also heard a lot around grants and incentives, which helped to confirm some of the work that we've been doing in economic development. But these are some of the major steps that we heard, and some of the things that will help to guide our work moving forward over the next year. And with that, I'm happy to take any questions.
Perfect. Thank you for that, Ms. Dodd. I see Councillor Bosch in the queue. Because I have a screen that tells me.
I didn't click it.
All right, I'm going to skip you then. Councillor Berg. Councillor Berg.
Thank you, Mayor Clayton. Thank you, Ms. Dodd. I'm just curious, with the comp wrapping up, the hospital wrapping up, you talked about these institutional buildings. I know they've been very helpful as residential construction has tailed off for a lot of trades, electrical, plumbing, drywalling. Are there any other projects that you're aware of coming down the pipeline?
12 billion.
Yeah.
There's a number of projects. A lot of the activity that we're seeing is more so on the industrial side, so it would be more of a specialized skill set. On the sort of retail, commercial, residential side, nothing. There's always projects being chatted about, and generally the outlook looks fairly good. Nothing that I could say certainly that everybody who's moved here for construction would have a job to be going to, but overall we do see steady levels of construction and activity across sort of that commercial, residential side. So.
Okay, thanks.
Thank you for that. Councillor Thiessen.
Thank you very much, Mayor Clayton. Thank you, Ms. Dodd. Mrs. Dodd, I'm sorry. There we go. So my question is really around unemployment. So I really appreciate all the stats that you presented to us. But for me, I was just a little troubled. The methodology that we use is just on Western Canada. Is there any opportunities that we as an organization could get a more specific number in the future on the local context as regards to unemployment?
Thank you, through the mayor. We have been working on a project with the Chamber of Commerce, the County of Grande Prairie, MD of Greenview, and Alberta Immigration and Labour, taking a look at our labour force. And the first piece of that was trying to dig into the stats and data that's available. One of the challenges that I had was when we were provided that data by a third-party consultant, is they took it and they're able to drill into the data. But because of the sample size that's taken within our region, any small fluctuations from month to month, when you take a look at the data, it really throws it off, and you see really drastic changes just because of it's so sensitive, I guess, to the fluctuations in the data that's being collected. So the short answer is yes. The longer answer is that I would be hesitant to hang my hat on it because it is very unpredictable. So that's something that we take the data that we work with from StatsCan and kind of layer that over with what our employers are hearing, what we're seeing on the job boards, the number of job postings that we're seeing, and sort of build out a more comprehensive picture.
Awesome. Actually, I just had one quick on top of that. I really appreciate your forthrightness on that. I guess maybe going forward, is there any way that we might be able to recognize a shortage in skilled labor as well? Because going forward, it's sometimes good to know what kind of professionals you have in the community and how we can identify where those gaps are.
Yes, definitely. That's something that we're looking at through the same project, through the labor force survey and work being done with the Chamber and our partners. Labor shortage is the #1 concern that we're hearing from businesses. It doesn't really matter what room I'm walking into or which industry I'm speaking to. Both skilled and unskilled labor are a shortage right now. I saw a report, there's over 1 million job vacancies across Canada. So it's not a Grande Prairie problem, it really is a Canadian problem, but we are definitely feeling it. And it's something that we're looking to come up with some creative solutions and work with our partners. This newest phase of the labor force study, GPRC has come on board as an active partner, and so we're working with them on strategies and supporting their programming decisions to build out programming and upskilling opportunities for our residents.
And develop our professionals here locally. Awesome, thanks. Keep up the good work.
Thank you.
Thanks, Councillor Thiessen. Councillor Blackmore.
Thanks, Ms. Dodd. I have 2 questions for you. One, you mentioned that the intra-provincial travel skews female ages 18 to 30, I think you said. Mm-hmm. Are you thinking that that's women who are leaving here to go to university and then not returning?
Thank you, through the mayor. That is generally our assumption, yeah. It seems to be a very common theme that we're hearing. And part of the work that we're doing with GPRC and the other partners is trying to track that and find ways to help keep residents here.
So this is related to the same question, but are you thinking, has your department given any thought to what kind of incentives could be used to bring our talented young women back?
Thank you. Through the mayor, yes, we're always looking at incentive opportunities or ways to encourage people to come back, not just our women specifically, but across all of our sectors and demographics, for sure.
My other question relates to the industrial development. The MD of Greenview's gig advantage was that they basically created a plug-and-play site where a lot of the pre-work had already been done for industries. I'm wondering what you see in Grande Prairie's future, if there's a potential site for the same kind of plug-and-play industrial development, such as northwest of the airport, and what we would need, what kind of support you would need from council to make that a potential.
Thank you. Through the mayor, the Hughes Lake area has been identified as an opportunity for larger scale industrial development, largely because of its proximity to the highways, the airports, and the large availability of land out there. There's a significant amount of work that would need to be done before we could ever reach that sort of plug and play model. But one of the big advantages of the Greenview Industrial Gateway is they reduce that risk of the unknown. So they're able to provide that certainty around infrastructure and servicing. And so that's some of the work that we're working on currently, is studying the Hughes Lake area specifically, but the city as a whole, taking a look at our infrastructure needs. And we're hoping to be able to bring back recommendations as to what that could look like, funding requests, or what type of investment would need to go in order to reduce that certainty. We're sort of in the thick of things right now, and so hoping to be able to bring something to council in early 2022 that we'll be able to sort of dig our teeth into over the next few years of council's term.
I'm really encouraged by that, and I look forward to seeing that. I believe that industrial development, the future of industrial development is going to rely on some incentives, and this is an incentive that we can gain back again in the future.
Thanks for that, Councillor Blackmore. I'm just going to interject a quick question here before I go to Councillor Lanners. Ms. Dodd, can you remind me of the dates the alternative energy study is coming back, as well as the labor market analysis?
So the labor market analysis was slightly delayed because we were fortunate to receive funding from Alberta Immigration and Labor, so we weren't able to start until October. So that has shifted our timelines a little bit. Likely we won't see any final results from that until late February, early March, I believe is the date. The alternative energy study is currently we're reviewing sort of the pre-final drafts, I guess. We'll be reviewing with CLT just before the end of the new year, and hoping to be able to bring some initial findings to council early in 2022, just to help set some guidance with some more further direction that will be needed further into 2022.
Perfect, thanks. Councillor Lanners.
Well, thank you. Good presentation. So I'm glad we're looking at doing something with Hughes Lake. The time I spent in development, is time is everything. So if you have something that's ready, they'll buy it. If you don't, they won't. They'll just move on. So that's encouraging. But that's not my question. So I'm really excited for the MD of Greenview and that they've managed to get 2 monster projects. But I'm wondering if we've done anything in regards to I call them barnacle businesses that lie on the undersides of the big whales that attach themselves to things like methanol plants. Are we looking at what types of businesses are drawn or ancillary to that kind of thing, and done any work to see what they need, what kind of land they need, transportation commitments, all those kinds of things, encouragement, incentives? Have we started that work or not?
Thank you. Through the mayor, yes, but there's so much more to do. So we have been working, chatting with Kyle Reiling. He's the executive director for the Greenview Industrial Gateway, and starting to have those initial conversations as to how we can work closer together. One of the big themes that he's hearing as he's working with these larger petrochemical companies is they really are invested in Alberta and they're invested in the Grande Prairie region. If they're going to come here, they want to ensure that they're trying to utilize local as much as they can. And so the city will have a huge role to play in that, in providing those support systems, from the accounting and HR firms right up to other waste service management and larger industrial type needs. Larger but smaller than the gig, I guess. So yes, we have started those conversations. On our side, we've been taking a look at the value chain for methanol, for example, and taking a look at some of those opportunities, some of those smaller opportunities that may be suitable within the city. But really, the bulk of our work is focused on more professional services and things that we're able to accommodate today. And then as we are building out our target sectors for Hughes Lake, really keeping our eye on those opportunities from the value chain for a more heavier industrial type development.
Are there other examples of these methanol plants in Canada? Like, are they doing that in Strathcona? I'm not sure. I'm just curious to see, or if this is something new and innovative, part of the times, or what? I'm not sure.
I don't believe there is methanol specifically in Strathcona.
Anywhere? In Canada?
On the East Coast. Gosh, I'm totally drawing a blank.
Yeah, well, if there are, they'd be good examples to look to and see what.
My understanding is there have largely been overseas, and the increase in demand for methanol is more of an emerging need. So this ramping up of production and the fact that we have two being proposed for our region is a more emerging opportunity. So I don't believe we have a significant amount of methanol plants across Canada. I believe on the East Coast, they're within the industrial development area out that way, but I wouldn't hang my hat on it, as I said previously.
Thank you. Yeah, that'd be good to ask if there are some in Eastern Canada.
Thanks, Councillor Lerners. Councillor O'Connor.
Thank you, Your Worship. Ms. Dodd, wonderful presentation. Thank you very much. You always fill in the gaps for me. Are there any strategies there about infill, and do we have an inventory of how many empty buildings we have in our industrial parks or the downtown? And is there any thoughts as to where we'd go to increase people to set up shop?
Thank you. Through the Mayor, we do have our DIG program, which is our Development Incentives and Grants program that was approved by Council in July. And a component of that is our Business Retention and Expansion Grant, which is sort of a two-pronged grant. It's targeted partially for those infill opportunities. So for businesses or property owners that have an existing property, 20 years or older is sort of our general marker, that are looking to invest in it and increase the value by $1 million and 25% of their investment. We have opportunity to waive for a tax rebate for 4 years on those infill. So that's been a big conversation of ours, is targeted opportunities for infill and redevelopment, both on the industrial side, so in our older established industrial neighborhoods, as well as on the retail side, so some of the larger retail vacancies, and whether there's an opportunity for repurposing or redeveloping those sites and increasing the value on those. In terms of strategies and inventory for vacant industrial land, that's a piece of what we're looking at for the Richmond Industrial Park and the engagement strategy that we've been working with the land and property owners in that area, is trying to get a good handle on what exactly the vacancy rate is, what the nature of that vacancy is, and where the city would be able to provide some support in terms of revitalization within that area.
Thank you.
Thanks, Councillor O'Connor. Councillor Bosch. Not that you're last but least. There you go.
Thank you, Mayor Clayton. So you talked about residential rental vacancies. Approximately 15% is your average. What are the commercial, office, business, and industrial vacancies?
So thank you, through the Mayor. It is a little bit harder to put a really fine number on that, and it's something that we've been struggling with in our department to capture. The data that we have doesn't always represent the reality, I guess is the simplest way to put it. Our best estimates, depending on the class, is between 1 and 12% vacancy. So some classes, restaurants typically see very low vacancy. Our highest vacancy would be on the industrial warehouse side. Again, this is a rough number, sort of that 11 to 12% on the industrial side, and a large piece of that would be those older properties.
So predominantly, I would like to know about office business, because with the effects of COVID and people working away, has that dramatically increased, or is it coming back?
It hasn't dramatically increased. We haven't seen that realization yet that we were anticipating early on. I think my impression is that a number of the larger employers that are taking up our major office space are still figuring out that balance of hybrid work. And so we haven't seen the mass exodus from office that we were predicting early on in COVID. I think there are still things to shake out within that sector, but to date, it's not a cause for concern.
Right, we see in Calgary where that is a major concern right now in their core. So it is something to keep aware of. Thank you for your presentation. It was awesome.
Thank you.
Thanks, Councillor Bosch. Just one question for you, or possibly Director Glavin. As many councillors have mentioned, the discussion of Hughes Lake is very interesting. Can you tell me, besides strategic priorities, when is Council going to have a discussion of the opportunities about Hughes Lake? And I can turn it over to the CAO or Director Glavin. Thanks.
Thank you, Madam Mayor. As Rebecca mentioned, we are pretty much on the final phases of the energy alternatives study in that area. We're actually booking some time, I believe, in a couple of weeks to review that. The alternative servicing component is completed. We did an in-house study a few months ago, and Aquaterra did another study. So we're going to combine the energy stream with servicing. So we expect in January to really do an internal review and ready for some presentation, probably late January, I would say. And I would have to have a good conversation with Council in preparation for the strategic planning session in February, as probably Hughes Lake will be a good topic of conversation. So we're going to have all this background presented to Council in probably late January, I would say.
Great. Thank you for that. Thanks, Ms. Dodd, for your report. And I'm just, we're going to take a 10-minute break. So we'll be back shortly. 4, 3, 2, 1. Good morning and welcome back to the City Council budget meeting for the 2022 budget. Next on our agenda is the operating budget portion, and I will introduce Ms. Whiteway.
Thank you, Mayor Clayton. So back to the operating budget. I'm just going to start out here with a highlight of the considerable work that goes into bringing this annual budget forward each year to Council to deliberate on. It is a year-long process that is led by Finance's budget team in collaboration with all city departments. It involves analysis, engagement with stakeholders, both internal and external, and priority alignment to ensure that budget being presented optimally aligns with Council's priorities. Administration works hard to bring the most effective and reasonable budget forward to Council each year. In 2019, the city began priority-based budgeting, otherwise referred to as PBB. It is a comprehensive budget practice that ensures budget aligns with Council's strategic priorities. Priorities outlined in Council's strategic plan provide focus to corporate and departmental business plans, while filtering budget decisions to ensure municipal dollars are prioritized based on Council's priorities. Scoring of hundreds of services provided to the community is key to ensuring that budget aligns with Council's strategic plan. Administration continues to review the applicability of the service scores to ensure best alignment. We have continued to budget predominantly in the top quartiles, meaning that spending in the budget is concentrated on those services that best align with Council's priorities. The graph being displayed demonstrates PBB in action, with quartile 1 being most aligned with Council's priorities and quartile 4 being the least aligned. As you can see, approximately 68% of the operating budget is invested in the most aligned programs and services within the city, whereas only around 1% is spent in the fourth quartile. The operating budget outlines the cost of daily services such as transit, road, maintenance, snow removal, and recreation programs. It ensures that there's enough funding for equipment operators, lifeguards, engineers, planners, firefighters, bylaw officers, and many other employees to deliver the city's programs and services. As I've mentioned before, it is the financial plan that provides the foundation for the city to implement business plans and execute Council's priorities. So in May of this year, Council directed administration to bring forward a tax rate change for 2022 that would reflect the pressures of inflation. The direction was to achieve a tax rate change of plus or minus 0.5% of forecasted inflation. In May, that forecast was 1.9%, producing a directed range of between 1.4% and 2.4% for 2022. Inflation projections have now risen to approximately 2.4% for 2022. Looking back over a number of years at the tax rate changes, there were years as high as 10%. However, over the last Council's term, rates were never increased more than 2% and were dropped below zero in 2019, meaning changes to service levels and tough decisions at deliberations. On average, the annual tax rate change over the last 10 years, from 2012 to 2021, has been 1.35%. The compounding cumulative effect of inflation versus our tax rates can be seen in this chart. As City Manager Galante stated, in order to ensure that we can continue delivering adequate services for our community in a sustainable manner, we had to be innovative and look at opportunities to deliver services in more efficient and effective ways. That enabled tax rate changes since 2018 to accumulate below 1%, whereas inflation has accumulated to over 9%. Direction for lower taxes, leading to tough and necessary decisions, prioritizing budget investment, and increasing annual analysis and collaboration to prepare effective, strategic, and realistic budgets for 25 incorporates administration strategy to support capital requirements into the future. I will explain this strategy later in the presentation. Additionally, as required, it incorporates estimated future salary contractual obligations and estimated forecasted price increases due to inflation. The 2022 operating budget for revenue incorporates a 5% increase, consisting of growth in the tax base, increased requisitions to be levied, commercial and tenant revenue for the Coordinated Care Campus, operating grant changes from federal and provincial initiatives, these being offset by the required expenses to support those initiatives, and participation declines in memberships and events, along with projections indicating lower investment income than we've historically achieved. On the expense side of operations, the 2022 budget includes a 6% increase overall. This includes contractual wage increases for our 3 employee groups, as well as increased rates for the Canada Pension Plan, employment insurance, and extended health and dental benefit costs for the city as an employer. The RCMP contract costs continue to increase, predominantly due to wage changes as a result of unionization. Onboarding of new services such as the Activity Centre adds cost to operations as well. The Coordinated Care Campus and the decision to budget flow through grants within community social development have also increased costs. However, expense increases are offset by related revenue increases in these programs. New debt obtained in late 2021 will increase long-term debt servicing costs. The revenues and expenses presented are what allows the city to provide the multitude of services that citizens use and enjoy on a regular basis. So to summarize, the city requires a number of budget changes between 2021 and 2022 in order to meet council priorities. Amongst the most common and largest changes are the contractual obligations for employee groups, employer costs for benefits, new services being added, such as the Activity Centre, demand for more mobile outreach program services, and the continual rising costs the city have for RCMP. In addition to these changes are pressures faced by departments from COVID-19. Participation in events, programming, and recreational services are not yet at, nor are they expected to, reach and recover to pre-pandemic levels. Changes to provincial funding and normal cost increases for materials, supplies, and contractors, utilities, and more continue to be a pressure on the annual budget for the city. Finance and departments worked to include the required changes and pressures and realistically evaluated budgets on a line-by-line basis. This will ensure that what is essential to operations is included in budget. Corporate leadership then reviews departmental budgets made and makes required decisions to achieve a tax rate change as directed by council. To get to the range between 1.4% and 2.4%, corporate leadership evaluated budget changes against council's strategic plan, ensuring alignment. CLT also constantly monitors approved resources to align with operational demands and priorities and reallocates when necessary. So the outcome? Today, you are being presented with an operating budget for 2022 in the lower end of the targeted tax range. Administrations worked diligently to propose that taxes for 2022 increase by only 1.55% from 2021. Going on the basis that some services and additions to budget are essential, while others have varying priority levels, administration has compiled a list of capital tax-funded projects that will, if removed from the capital plan, achieve a lower tax rate change than the proposed 1.55%. If these strategies are implemented, the tax rate for 2022 could be decreased to 0.98%. This is a summary of those proposed strategies that could be unfunded and allow for the 2022 tax rate to be at 0.98%, rather than the proposed 1.55. These 6 projects are funded by way of capital tax, which is considered an expense line in the operating budget. Capital tax is a budgeted line item each year that allocates a portion of the tax levy to fund capital projects. We will continue into the capital plan where these projects will be presented and described to Council. Decisions on these strategies will be held until the end of the presentation. Capital projects transform and sustain the city of Grande Prairie, bringing to life the progressive vision Council holds for the community. Capital budgets provide investment in infrastructure, including facilities, vehicles, roads, stormwater, technology, equipment, and more. The 2022 capital budget reflects the identified capital needs to support and deliver municipal services. Residents of Grande Prairie look to Council and administration to build, revitalize, and maintain the infrastructure that is essential to their daily life, health, prosperity, and enjoyment. I will now turn the presentation over to the Director of Corporate Services, Kinza Trim, and City Manager Galante for an overview of asset management.
Sorry, Ms. Trim, before you start, I just wanted to let Council know questions will be at the end, so there will be quite a bit of information in the meantime, so just please make your notes and we'll come back to it. Thanks.
It's all good. Thank you, Ms. Whiteway and Mayor Clayton. So asset management is a structured process that's focused on optimizing the life cycle of our municipal assets to maximize the value of the capital plan. The ultimate goal is to maximize the life expectancy of the assets while minimizing the total cost of ownership. In 2018, the city engaged an external party to complete an assessment of the city's overall asset management maturity level and to help define a path forward based on identified best practices within municipal environments. At that point in time, in alignment with international standards, ISO 55000, the city was identified as having an asset management maturity rating of 32%, positioning us within the establishing category. As part of the journey towards enhancing our level of maturity, in 2020, the city commenced a shift towards a more centralized model with the establishment of corporate asset management. This area is currently consisting of 1 employee, Mr. Prava Mahadio, who works collaboratively with city departments who manage city assets to support the advancement of asset management practices. Mr. Mahadio will be providing Council with a more holistic orientation to the city's asset management practices and future strategies as part of Council's orientation early in 2022. As a first step towards enhancing our asset management maturity, we have published our first State of Infrastructure report, which was referenced earlier by City Manager Galante. This documents the current state of the City of Grande Prairie's core infrastructure under the direction, ownership, and control of the city. The areas covered in this report include assets within transportation and engineering services, parks, fleet, and facilities. This report reviews our assets and forms a picture of our asset base as a snapshot in time at the end of October of 2021, which can be used to inform and guide decision-making. Information used in this report is based on the best available data as of October 2021, supplied by various departments across the service areas. Here you'll see it references information relating to our current replacement value. So an analysis of the corporate asset data shows that the current replacement value, otherwise known as the CRV, of all infrastructure assets is $1.92 billion. It should be noted that this asset value does not include land holdings that the city owns. This is because land does not depreciate like other assets and hence does not require the same level of maintenance. Additionally, it'll speak to our asset condition. The general overview condition of the city assets is rated as good to very good. The assets that are of concern to the city is the fraction of assets rated as poor or very poor condition. These are the assets that are approaching the end of their useful life. They may still be functioning, but at a questionable level of service, and the city needs to be prepared to respond to failures or proactively address them before they fail. The final component is what we call the infrastructure gap. It's estimated that the city's total infrastructure needs, excluding any new projects, funded and unfunded over the next 10 years, is approximately $348.5 million. Under existing scenarios, the city forecasts the ability to fund approximately $259.1 million during that time. The remaining $89.3 million has been identified as the 10-year infrastructure funding gap. And I will pass it over to City Manager Galante to speak to the asset condition.
Okay, thank you, Director Trim. I will provide an overview about this very interesting graph here you have on your screen that we call the asset condition of the core asset classes for the city. So the condition of each asset category was evaluated to represent the current health of the city's infrastructure. This is a snapshot. It's just a photo of today's analysis. This is not a snapshot of the condition of our key assets at the end of 2020, the data we have been using. So as you see here, color-coded, the dark green means a very good condition, light green is a good condition, yellow is a fair condition, orange is poor condition, and darker red is a very poor condition. And what's the meaning of that? So the different colors determine how much life, remaining useful life, an asset has. So for example, under the very good category, the darker green, an asset has still 80% or more of the remaining useful life to go through the life cycle. On the yellow category, on the fair category, that means that the asset has between 40 to 60% of remaining useful life. When we go into the poor category, the orange in the graph, the asset has between 20 and 40% of life remaining. And the darker red, the very poor category, is just 20% or less life in the asset. So the State of Infrastructure report uses a combination of methods to determine the asset conditions presented. I will give you a particular example on roads. As you will see later, is one of the main contributors as asset class into our infrastructure gap. So for roads, for example, we use what is called the Pavement Quality Index. From now on, I will call it PQI, Pavement Quality Index. It is measured from 0 to 100. So 0 means that the road is in very poor condition. 100 means that the road is in excellent condition. The PQI, I don't want to go too technical, but PQI has 3 subcomponents when we analyze this index. One component is called the Structural Adequacy Index that measures the strength of the structural base. The Ride Condition Index, it measures the rideability, smoothness, and deflections. And the Surface Distress Index that measures the frequency of alligator cracks and other surface defects. The PQI is an industry standard benchmark used to indicate the general condition of a pavement. As I mentioned, the method to calculate the PQI is based on a technical inspection of a number and types of distresses and defects on a pavement. This inspection is performed using a vehicle with a number of sensors and cameras mounted while driving on city roads. The information collected by this vehicle surveying distresses and defects on city roads is then processed into a software, what we call the road matrix software, and that is our pavement management system. Similar software and analysis we do for the different asset classes that you have here on the screen. I will just focus a bit more on roads. It's important to know that the minimum acceptable PQI as a trigger point for rehabilitation of roads, and we have different treatments on how to rehabilitate a road. It's different numbers, so it's 55 is the PQI for arterial roads, 50 for collector roads, and 45 for local roads. For bridges, for example, we use another method that is called BCI, or the Bridge Condition Index. While some assets undergo routine formal condition assessments, others are based on age and expected useful life of the asset and an expert opinion. I want to point out again, this is the first time that we are running this kind of calculations in the city. I promised this last year at council deliberations. So as Kinsa mentioned, the maturity level on asset management in the city is at the beginning of the journey. Okay? It's establishing. We need to evolve and mature, and the reports will have more information in the future. The few points I want to highlight here is like assets related to transportation and engineering services, like road, bridges, traffic, sidewalk, trails, and storm systems. And overall, like 62% on good and fair condition. However, it's important to point out that approximately 38% of the roads are in the poor condition category. We call this the backlog. Just remember that. So assets below the fair category, so under the poor and very poor category, we call the backlog. In a case of roads, it's 38% at the end of 2020. Roads are still functioning, of course, but there is a higher risk of deterioration as we evolve into the deterioration curve of the assets. And that's leading into poorer road conditions, resulting in increased frequency of potholes, vehicle damage, slower speeds, more deflections, longer commute times, greater gas consumption, just to name a few. On the facilities assets, facilities are in general in very good condition, as you can see in the graph, with 77%, almost 80% on the very good and good category. 53% of fleet assets are on the good and very good category as well. So determining the right backlog, if you can go back to the previous one, thank you. Determining the right backlog is up to each kind of a city, each community, and is based on what is defined as an acceptable level of service for each asset class. We need to also consider the level of risk associated to each asset class. So for example, bridges will have a higher risk than parks on aggregated basis due to the number of users and the life-threatening impact on a potential failure. We here consider what is the likelihood of failure versus the consequence of failure. For a bridge, that is a very serious matter. For a road, you would see more deflections, but nobody will die. So a backlog of 20% under the poor and very poor condition may be acceptable on some asset classes, but not acceptable on others. The proper backlog on each asset class and associated level of service is a conversation we will have with council in the near future as asset management evolves and matures in the city. And I think, Kinsa, you will take the next slide.
Yes, I will speak to the 10-year infrastructure gap that I had referenced earlier. So a combination of each department's spending plans and needs over the next 10 years were used to calculate the city's infrastructure deficit. So total capital investment needs for each department were based on a 10-year horizon and included only investments to maintain existing assets. So no new projects are represented in this data. The gap between total capital investment required to maintain existing assets and the estimated future capital funding required to sustain existing levels of service results in an approximately $89.3 million deficit over the next decade. Of concern is the projected growth of the infrastructure gap over the next 10 years. So strategies to manage the infrastructure gap include an adjustment in the current levels of service for certain assets or the potential creation of an infrastructure fund specifically designed to address critical priorities contributing to the infrastructure gap itself. Council may consider in the future to define a percentage of taxes to be set aside to seed an infrastructure fund, for example. As a demonstration of this, a tax rate to maintain regular operations can be established. In today's case, where administration presented a 1.55%. An additional 2% infrastructure fund tax levy collected would result in a total tax impact of 3.55% if that was a strategy Council chose to adopt.
I will take the next one. In this graph, we can see the different contributors to the infrastructure gap. And as we can see, roads as an asset class is the main contributor to the infrastructure gap with almost 60% of the share. That means we need to focus our attention on this group. The latest condition assessment of this asset class is reflecting an average PQI at the end of 2020 of 55.5, excluding the old bypass road, Highway 43, with that almost 37% of the backlog of roads falling behind the trigger point. Including the old bypass road, the average PQI was 56, and the backlog was at 38%. That means 38% of all roads fall under the poor or very poor condition category. Ideally, we would like to get the backlog down to something between 10 to 25%. It costs a lot of money to reduce the backlog to 10%, and this is, all cities have backlogs and infrastructure gaps, so we're not unique in this. Our goal is to reduce the 38% backlog on roads to a more manageable number of 25% over time. At the 38% backlog, there are about approximately, these are like high-level estimates, about 300 lane kilometers of road that are in need of some form of rehabilitation. Could be overlays, full depth reclamation to the full reconstruction of the road, different treatments. In 2020, we worked on approximately 38 lane kilometers of road, and in 2021 on 24 lane kilometers of road. In order to bring the backlog to 25% between 2033 to 2035, so we're looking at a decade ahead, the city will have to allocate about $16 million on the long run in terms of road rehabilitation program. The 2022 allocation for roads is $11 million without the old bypass road. There are about $5.75 million allocated to rehabilitate the old bypass road. So we will have to sustain the 2022 level of funding for all other roads, excluding the bypass road, at $16 million in the next 10 years to at least make a difference in bringing the backlog to a more appropriate level. So in a nutshell, and summarizing all this little bit technical information, in the next few years, you will see on the long-term capital plan for roads, for example, we are injecting $11 million in 2022, 2023, 2024, and then increasing to 12, 13, 14, 15, up to 2032. So we have a $2 to $3 million gap that if we want to start in the near future, managing the backlog on the road asset class, could be important to start seeding some funding, as Director Trim mentioned, into an infrastructure fund to build that fund to be managed in the future in order to improve the overall condition of our roads. Similar analysis can be done. I'm not going to go into details on the different asset classes, but similar analysis I use for roads could be done for the other asset classes as well, buildings, parks, fleet, etc. and determining the right level of service. That is the conversation we will have to have in the future with Council. Is the current level of service on the different asset classes appropriate? We have industry standards, some benchmarks, but also it's up to Council to determine that. Just a little bit for a historic context, the latest adjustment of the PQI, the level of service for roads, was done in 2011, when the city decided, Council decided to reduce a little bit the PQI trigger points. Not a lot, but about 5 points for arterial collectors and local roads. So it's up to Council really to determine the level of service based on, of course, safety standards to the assets. So the intent for this for now is for you to think about this. This is the first time we're doing this calculation. We don't even have a proper software. This is all based on a lot of math and Excel spreadsheets on the background. We're probably working towards a selection of a software for asset management in the next year and a half to 2 years, fully integrated with the ERP, with the Enterprise Resource Planning software that we selected. So it has to be full integration. And the ultimate goal of this is to feed, via asset management, to feed the capital plan. So right now we vet all the capital plan, all the projects from the different departments through CLT, using some sort of a matrix for prioritization. But proper asset management will determine what is the optimum injection of funding to the assets that need the money at that time to optimize the life of those assets. So the ultimate goal is that asset management plans and software will feed a more professionally developed capital plan that you will see in front of you. So in a nutshell, it's just for information. Start thinking about this, to be aware of the gap, and to start thinking about the different options we will have to manage it, so we don't, we don't allow this gap to grow into the future. So thank you, and I hope it was informative.
Great, thanks for that, CAO Galante and Director Trim. We're going to now move on to strategies. Oh, my apologies. We are taking a break now for lunch. We will be back at 1 p.m. Thank you so much. Sure, if it's not, sure, you had wanted the questions at the end. Sure, but I guess I'm open this to potential lots of questions. I'd rather wait. Yeah, thank you. 2, 1. Good afternoon and welcome back to the Budget 22 Council meeting. We are on item number 8, which is strategies, and I will defer to Ms. Whiteway.
Thank you, Mayor Clayton. Okay, so the total capital plan being proposed today for 2022 is a total of approximately $48.4 million. This includes investment in buildings and improvements, information technology, machinery and equipment, parks and land development, roads and infrastructure, and some other special projects. To fund all the proposed projects for 2022, administration has used a mix of capital tax, which is the portion of the tax levy designated for capital purposes, Council Strategic Initiatives Fund, federal and provincial grants, reserves, and other revenues. There are also 3 projects unfunded at this point, which I will address later in the presentation. Annually, the city receives 2 funding streams for capital. The Municipal Sustainability Initiative Fund is a provincial funding allocation for eligible capital projects, while the Canada Community Building Fund, which was formerly known as the Gas Tax Fund, is a federal allocation for eligible capital projects. The Canada Community Building Fund is allocated to municipalities on a per capita basis, with eligible projects including local roads and bridges, highways, public transit, community energy systems, sport, recreation, culture, and tourism infrastructure, as well as disaster mitigation. The province provides Municipal Sustainability Initiative Fund to allow municipalities to fund projects such as roads and bridges, water systems, public transit, recreation and sport facilities, as well as other local key priorities. This program will continue until 2023, where it will then be replaced with a new program called the Local Government Fiscal Framework. As discussed, the city relies on provincial MSI funding to support capital projects. In 2021, the city received a one-time top-up and will see significant declines in funding going forward. For 2021, we did receive a total of $18.3 million and are forecasting to receive $7.3 million next year. This is an $11 million difference. In 2023, the province will transition away from this funding stream to the local government fiscal framework. However, it is not expected that we will again see the levels of support that were once received. To mitigate the loss in Municipal Sustainability Initiative funding expected in the future years, Council approved a capital tax strategy at last year's deliberations that will see capital tax increase gradually over future years. Funds will also be utilized from the Future Expenditures Reserve to smooth this transition, allowing for a gradual impact to taxpayers over time rather than an abrupt increase. The 2022 operating budget has been prepared under this strategy as approved last year. However, through prioritization by corporate leadership and departments, as well as the 2021 one-time top-up of MSI funding received, it was determined that 2022 would not require as much capital tax as was expected when Council deliberated last year. This portion of the strategy was adjusted in budget accordingly. We are now proposing that the capital tax increase be more gradual than originally planned, as well as reserve transfers appropriately adjusted to maintain the original intention of an annual tax increase of around $1 million over the term of the strategy. The slide being shown to you today demonstrates this adjusted capital tax strategy. If Council so chooses to continue with this plan, the bottom line taxes required in your 2022-2025 document will remain the same, as those impacts have been accounted for in the proposed 4-year operating budget. However, adjustments to funding sources will be required within the operating budget to reflect adjusted allocations between capital tax and reserve transfers. When the capital tax strategy was approved last year, It was planned to reach 14 million of capital tax by 2026. We are now proposing a more gradual increase and achievement in 2028. It's just a quick update from our Q3 report on the city's long-term debt. Debt is another source of funding for larger infrastructure projects that have longer useful lives. At Q3 Corporate Services Committee, the committee was provided an update on the status of the city's debt. As you can see, there is remaining debt limit room available if required, as well as we are within our annual debt servicing cost requirements. These regulations are set out in the Municipal Government Act. Council Strategic Initiative Fund was established to align with the current strategic initiatives running from 2019 to 2022, based on the last Council Strategic Plan. For this fund, $3 million of capital tax over 4 years was used as a funding for a variety of initiatives as approved by Council. This chart is an update to show what initiatives were approved, how much has been allocated to those corresponding initiatives, and how much has been spent to date. All funds have been earmarked for various initiatives, and there are no remaining funds of the original $3 million. It is anticipated that the remaining unspent funds will be spent within the 2022 fiscal year. However, on August 23rd, Council did approve the sale of land on Resources Road, and the proceeds from that sale were reallocated to this fund. The transaction's been completed, and funds are currently being held in trust to be released upon completion of conditions, hopefully later this month. This will add an additional $869,000 to be allocated. I will also note that within the capital plan, as presented last year, one project, the Bonnett's Energy Center and Arena Business Case, was funded with Council Strategic Initiatives for $125,000, with the remaining from future expenditures reserve. So if this project is approved to proceed, the $125,000 can come from that $869,000 from the Resources Road sale, or it could come completely from the future expenditures reserve. When you develop your strategic plan for 2023 to 2026, administration will look at a similar structure, allowing for Council to fund various initiatives to support the strategies decided upon for the next 4 years. I'll now turn the presentation over to the corporate leadership team to present the capital projects being proposed for 2022.
Perfect. Thank you for that, Ms. Whiteway. I'm not sure who's putting their hand up first. Thanks. Director Trim.
Thank you, Mayor Clayton. So the first capital project, which is currently located in the Council City Manager's office, is the Enterprise Resource Planning System and implementation, for $2.5 million. This is the implementation of a business process management software that allows us to use a system of integrated applications to manage the business and automate many background functions. The system is aimed at modernizing our finance, human resources, and procurement operations, and will support risk management strategies and enhance operational efficiency. The project was initiated in 2020 and is a multi-year project that is anticipated to complete in 2023. Funding has been allocated in the capital plan to reflect the timing of the financial investments required over the duration of the project. For historical context, as I alluded to, the project began in 2020 when a consultant was secured to conduct comprehensive process reviews and systems requirements gathering sessions with staff. The information gathered through the consultant formed part of a solid business case that was presented to Council and approved in 2020. After completing a robust RFP and evaluation process, the city chose Oracle as its enterprise resource planning system with Deloitte as our implementation partner. We're currently moving into the implementation phase on this project and anticipate a significant portion of the system implementation will be completed in 2022. Once completed, the ERP will result in the integration of 13 systems that will work seamlessly together to support risk management strategies and enhance operational efficiency. Under the corporate services area, we have 4 items listed here. The first one is corporate IT initiatives for $230,000. This item includes 2 components. The first is the replacement of the Skype for Business telephone system to utilize the Microsoft Teams cloud solution for all City of Grande Prairie telephone services, and that's at $200,000. So Microsoft has indicated through industry that the Skype for Business solution is nearing end of life and will be discontinuing the product over the next few years. This project would see current on-premise servers and hardware removed and the organization transitioning to using the Teams cloud solution for all phone-related services and technology. This upgrade will bring the technology in line with industry standards, ensuring a supported solution, as well as removing the need to upgrade and maintain discontinued hardware. Delays in the replacement of Skype for Business could put the city at risk for telephony communications, as the manufacturer will no longer create updates or support the system. This leaves that's open to potential security breaches, and the hardware itself will be at risk of failure. The second item under the corporate IT initiatives is the network reassessment scorecard for $30,000. This is to analyze performance of the network, usage, detect bottlenecks, identify security gaps, and develop a roadmap for comprehensive network design that will meet corporate demands. It allows for long-term planning for network expansion and improved performance as new solutions are introduced to the network. It essentially helps improve performance of our network, impacting both the speed and stability of the network itself. This assessment is to be conducted every 5 years at minimum, and the last assessment was completed in 2017. On to the next item, municipal wireless projects for $68,000. That one also has 2 components to it. The first is the replacement of the Bonnet's Energy Center Internet Network Management hardware for $60,000. The current Bonnet Energy Center network hardware is at end of life, and in order to continue to maintain internet service for the facility, an upgrade of the outdated equipment needs to be performed. The project will replace Wi-Fi access points with Wi-Fi 6, which is a new standard for improved bandwidth capabilities. This hardware typically has an 8-year lifespan, and the existing hardware is at 10 years old. Today's society streaming more content than in the past via smart devices. This Wi-Fi 6 technology will allow for that capacity at that facility. Second item that forms part of that line is an outdoor wireless Wi-Fi at 2 new intersections for $8,000. So transportation will be installing 2 intersections in 2022 located at 136th Avenue and 97B Street, and the second at 108th Street and 68th Avenue. These wireless networks at those intersections is essential for a number of components, including things like intelligent transportation systems, the traffic signal preemption for emergency vehicles, as well as a number of other items. The third item on my list is the video surveillance for $82,000. Again, 2 components under this. One is to replace the end-of-life video surveillance servers for $22,000. So each building that currently utilizes the city's video surveillance system as a server that acts as a digital video recorder on site. There are 2 servers that have reached the end of useful life and need to be replaced with updated units. And each of those will cost $10,000 with an additional $1,000 for professional services to configure them. The second part of that is to replace the Eastlink Center video surveillance cameras for $60,000. So each of, the buildings that currently utilize the city's video surveillance system have cameras installed throughout the facility, both in internal and external locations in high-risk areas, secure areas, and other sensitive areas. Cameras currently utilized at Eastlink are reaching their end of useful life and need to be replaced. The original cameras were installed when the facility was constructed, and they're approximately 10 years old. So we're running outdated operating systems and hardware at the moment. And the final item on the list is the digital orthophoto for $140,000. This is a high-resolution digital orthophoto and LiDAR that is updated on a 4-year cycle. It's a partnership project that we do with the County of Grande Prairie in order to reduce the cost of the orthophoto collection for both the city and the county. It is actually one of the city's most utilized data sets and is used by multiple internal departments, but also heavily used by private industry throughout the city and the region. And that concludes the request from corporate services.
Perfect. Thank you for that. Director Miller.
Thank you, Mayor Clayton. So for community services, we have a number of capital projects. I'll start off with the accessibility initiatives. It's been an ongoing initiative addressed by council or supported by council, and it addresses accessibility at city facilities. For 2022, it's planned to work on the RCMP front entrance way and also the Bennett's ticket window modification. The initiative started in 2019, and since that, on an annual basis, our corporate facilities department has been doing projects every year, fitting them in with other capital and preventative maintenance projects. The Coca-Cola Center handicap access, that's a $40,000 capital tax project, and it would be the installation of a handicapped operator's system on doors to allow patrons to push button egress from the Coca-Cola Center to the Eastlink Center. The Creative Arts Center roof replacement is a $115,000 capital tax project, which is to replace the roof at the Creative Arts Center, which has been identified as deteriorating and requiring replacement. Next on the list is the Legion Field repairs. It's a $120,000 capital project, and a property condition assessment report has identified numerous repairs that need to correct deficiencies, including renovating the interior of the tower structure, replacing the exterior staircase, maintenance to the change rooms, as well as address issues with the siding and roof repairs. And then we have the museum fire hall replacement. It's a $86,000 800 capital project. And that's a replacement of the fire hall replica at the Grande Prairie Museum's Heritage Village. The total estimated cost is $251,000 and well, just about $252,000. 165 of that was approved in 2020, and now we're seeking the additional funds to proceed with it. The plan is to demolish the existing unit. It is a replica, so there is no heritage value to it, and then build a new structure close by, just a little bit to the north of it, and on higher ground, which would set us up better for the future. And the existing site is in a low spot, and we've had some water issues with it, so it's we'd like to move it. That building we also use as a maintenance shop for one of our staff who works at that site. And then the plan would be the upper level, when complete, would provide opportunities for programming space, which could be an additional revenue source for the city as well. And then next is the Heritage Discovery Center demolition. Right now, HDC is in Center 2000, and it's a $130,000 capital tax ask. It would be relocation of the Heritage Discovery Center collections items, and it would provide additional exhibit space and collection space at the museum as well. And then once moved, the existing space will be turned over, well, it'll be renovated and then turned over to the South Peace Regional Archives. And I think Council's aware of that plan from previous presentations. And then the Leisure Center demolition project. We have existing funding of $840,000 in the past budget, and we're, as we've explained in the past, working with the province on the project and hoping to gain some efficiencies there. The information we have from the consultant hired is recommending we have about $3.9 million set aside to complete the project. The project is set to be completed in the fall of 2022. Next on the list is the outdoor pool shelters. It's an $80,000 ask. It would be purchase of shade shelters, and they'd be placed in the green space at the Grande Prairie outdoor pool. And it would also provide safe protection for the users at the site. So in those, I guess this past summer we had some extreme temperatures as well. So on days like that, it'd be a place for our patrons to find some shelter and some cooling off space to enjoy the experience even more. And then next would be the Bonnett's Energy Center. It's the second portion of the ask for replacement chairs. It's a $60,000 ask. It would be to replace the aging inventory and enhance the experience for our guests. The existing chairs are over 25 years old. The original lifespan was anticipated to be 10 to 15 years, so we well exceeded that. We currently have 357 new chairs, and typical banquets in that site are between 500 to 700 guests. If we receive this additional funding of $60,000, we could have a full complement of new chairs and enhance the experience there as well. And I guess the risk with not proceeding with that is if we wait too many years, then we won't be able to match up the existing chairs as well. So we're recommending that to council. The next is the Bonnett's Energy Center Concourse concession upgrade. It's a $150,000 ask. So it'd be renovations completed to the South Concourse concession to enhance service and safety within the space. The concession upgrades request was for 2022 in the East End Concourse concessions. It's not structural in nature. These are the renovations would consist of paint, new countertops, signage, and some equipment upgrades as well. And then next is Bonnett's Energy Center, the truss upgrade. That's on the Bose Event Center. And this would allow us to upgrade the truss system in that venue, and we'd have 2 solid points of contact for rigging equipment at events. Currently, we have to monitor the events we do host there because of the weight load on the roof structure as well. And I know at times in the past, during events held during the winter, we've actually had to shovel snow off the roof to ensure that we're within the load limits once we have speaker systems attached to the roof or to the ceiling. And the next is the renovations to the rock room. It's a $50,000 ask, and it would be, again, renovated to enhance the customer experience. And we're also very close to signing a sponsorship deal with that for that space as well. So this would be a better experience for the sponsor as well as for the venue. And then finally on this slide, it's the transit accessible shelters and bus stops. And this is just a continuation of the ongoing initiative to upgrade transit infrastructure by replacing shelters that are past their life cycle and also adding new shelters. It's a $25,000 ask. And then the next slide is switching over to community group funding capital projects. The first one is the art gallery project. It's a $40,000 ask, and it's to do some work in the storage space for exhibits, as well as new technology and enhanced workshop space. Next one is Nighthawk Year-Round Adventure Park. It's $122,900, which would be for the purchase of equipment to enhance snowmaking and hill improvements. This was a multi-year ask, continuing into 2023. You'll see it again there. And the MD of Greenview also contributes about $246,000. And then the County of Grande Prairie also contributes the same amount as the city. Next is the pickleball group ask. It's a $15,000 ask. This would be a water standpipe at our outdoor pickleball court. Currently, staff have to haul water to the site so they can clean the space. So this would be a water standpipe so they can do their own cleaning, which would free up some staff time, as well as put the onus on the club to maintain the site. The next one is community group funding. It's a STARS $50,000 capital ask. This is to support the Grande Prairie-based H-145 helicopter. It is a multi-5-year ask, and council agreed to include this in the budget for 2022 and 2023. And then also to, for the future years, to leave that decision to this council, I guess. It was a previous council who made the recommendation to bring it to budget. And then it is the South Peace Archives ask. It's $101,100. This would be for the renovation and relocation of the Heritage Discovery Center at Center 2000. So this money would assist them with renovating that space to create a permanent and professional home for the region's heritage archives. And this amount is the amount that they've provided to us. And the total ask is, the total project estimate is 1.15 million, which they anticipate they could receive the other through grants that they've applied for. And then finally on this slide is the Bennett's Energy Center business case, and you've heard Ms. Whiteway talk about that already. And this has been talked about a few times with council in the past. This business study report will further explore and provide information as to the viability of a new events center, and also look at the optimal use of the existing venue into the future. If approved, the plan would be to begin this project after the completion of the Rec and Culture Needs Assessment or Strategic Plan, which we just awarded the contract to a consultant. So that Rec and Culture Plan will be completed in 2022. And then should this business plan be supported, the plan would be to complete this after the Rec and Culture Strategic Plan is completed. As we know, we're going to gain information in that plan that'll help us with this business plan, potentially reduce the cost of this business plan if council does support it. And also I'd like to just remind you that there was an additional capital request for renovations to the lobby and box office at Bennett's. It was Rev Place at the time, now it's Bennett's. And so administration we have moved that ask to 2023, thinking that by the time we do the Rec Culture Strategic Plan, and if we do the business plan, will be late 2022 and probably into 2023, so we thought it'd be appropriate to move that ask. And I think that's it, and I'll turn it over to, oh, sorry. One more page. All right, vehicle and equipment replacements.
The biggest one you're trying to hide.
I'm not trying to hide any. Well, all right. It's just I feel like I'm asking for too much, but
you are.
Well, yeah.
I apologize. Continue.
Okay, sorry. So the vehicle and equipment replacements, it's an annual process that we go through, and it's based on life cycle assessments, and that's completed by our fleet department. It's 3.152 million. And then Community Knowledge Campus, the robotic scrubber, it's a $130,000 ask. So that would be purchasing a robotic floor cleaner, which we would use at CKC or the Community Knowledge Campus. And it would help us reduce custodial restraints, and it would also allow us to take an existing unit from CKC, and we'll use that at the new activity center. So we'll repurpose one from there to the activity center. And then Eastlink Center fitness equipment, it's a $75,000 ask, and it's to upgrade the facility with new fitness equipment, allowing us to keep current and attract and retain clients. As an example, a lot of our treadmills are 10 years old, so they are due for some replacements as well. And then Eastlink Center pop-up kiosks, it's a $24,000 ask, and that would be small kiosks in the hallways at CKC, and they'd be used by local vendors for rent-based businesses, and they could be used on a rotating basis and for busy events as well, where there's an opportunity to rent these out and enhance the experience at that site. And then there's a Montrose Culture Center tractor. It's a $36,000 capital ask. So it'd be for the purchase of a tractor to be used at that site to assist with immediate snow removal. Recently, we changed the classification of some staff there. So we have operations staff versus custodial staff now. They'd be capable of using this unit to remove snow at the site. And it would make for timely removal of snow removal for different events. And currently it's contracted out, and we spend over about $50,000 a year on snow removal just for that site alone. So we're confident this would help us save some money. And then Bennett's Energy Center winter outdoor tents, it's a $80,000 ask. Could be purchase of tents that are suitable for winter and summer months and to be used for a variety of events. And the thought is that if we were able to purchase these, we could either lend or rent them out to different groups as well, and enhance our the events that we can host in the city. Some of the events it could be used for could include the Grand North Winter Festival, Canada Day, Christmas tree lighting events, New Year's, and other various events that we host on the plaza and as well as throughout the community. Now I think I am finished. Thanks, Mayor Clayton.
Thank you, Director Miller. Director Glavin, are you next? Perfect.
I am.
Thank you.
Thank you, Mayor Clayton. Now to more fun stuff and unfortunately more expensive. Hillside Area Redevelopment Plan action items. This is to complete the tree planting in the Hillside area as part of the Area Redevelopment Plan that was approved a number of years ago. Prior to this, we have done 7 other phases of tree planting as well as new signage and trails throughout that area. For land acquisition for $1 million, this is to allow us to procure land for capital projects throughout the year. This isn't the only touch point that council has with this item, as if we borrow, it has to come back for a borrowing bylaw approval. So council would ultimately get to see pretty much anything that goes through this again, unless it was much smaller in magnitude where we may consider using a different funding source, but our CFO will touch on that a little bit later in the unfunded items. For outdoor park furniture, this is benches, picnic tables, garbage cans, bike racks throughout the city's parks, trail network. Last year we spent much of this in the Muscogee Park area. However, this will go to anywhere we have this outdoor furniture that is beyond just regular repairs and maintenance. Playground replacement program. We have a few playgrounds on the list for next year. This allows us to go in and take out old playgrounds in areas that are no longer serviceable or more expensive to service because we don't have access to parts, as the playgrounds in some areas are quite old and outdated. Playground surface replacement. This allows us to go into playgrounds and ensure they have adequate amount of material. So that would be whether that is sand, wood chips, rubber, in order to meet standards for drop testing. So if a child falls off of equipment, that there's a sufficient amount of material to mitigate their fall. South Bear Creek Diamond Renewal. Most of the money in here has been, over the last few years, been going to shale installation and replacement at the diamonds, and will continue to do so for probably the next 2 years, 2.5 years, to complete the remainder of the diamonds. South Bear Creek lighting replacement or installation. This would go towards Diamond 3, which currently doesn't have lights, so these would be the diamonds on the south side, or east side, I should say, of 100th Street. And this would allow for increased opportunity to play at night. The South Bear Creek lighting replacements, this would be for Diamonds 1 and 2. These lights were installed in the 1980s and have become difficult to service and find parts for. As well, they don't meet current standards. So for example, I believe when we had National Fast Pitch here a couple of years ago, they actually had to rent lights in order to hold the event at our facility. The Swanhaven rink replacement design. So this is meant to be beyond Swanhaven. So the intent here is to create design for rinks throughout the community for replacement, and do a design that would allow us to choose whether or not we wanted to have covered or uncovered rinks. So it's not just Swanhaven, although Swanhaven was one of the triggers for bringing this forward, as that rink is due for either replacement or significant repairs. For the tree replacement program, this used to be the cottony psyllid program when that was killing trees a few years ago. Essentially, any trees that are being attacked by insects or disease, we use this to replace those trees. Moving on to roads and infrastructure, the bridge maintenance and replacement program, essentially it's exactly what it is labeled as. So we do any of the cleaning, minor repairs on bridge. Next year, we're looking to potentially do a deck replacement of 99th Avenue Bridge downtown. The way that this fund operates is that we carry over funds from year to year to build up sufficient amounts to do something like a bridge deck replacement on a bridge. As well, next year, we're looking to replace a culvert on Range Road 53 in kind of the northeast part of the city. Inspection programs. So this is where we inspect all our different various classes of assets, from bridges, roads, sidewalks, traffic signals, storm infrastructure, and the spillway on a number of different cycles. For example, we do 1/3 of the roads every year in the city. We do a third of the sidewalks and pathways. And then any of our bridges are on a 21 to 57-month cycle, depending on their classification. For the old Highway 43 rehab, we've been picking away at this over the last couple years. This year we did from 100th Avenue to the bridge around the hospital, as well as from 128th Avenue to the city limits. Next year we're looking to do 100th Street from 116th Avenue to 128th Avenue. And the following year, we're looking to 116th Avenue from 100th Street to the bridge, and that will essentially have completed reconstruction and overlays for much of that corridor, aside from some on the west side. There are still a number of other upgrades that have been identified for that road from a storm perspective, as well as some other geometric upgrades, but this will have taken care of the road as it was given to us without any significant improvements. It will have been largely rehabilitated. Moving on to pedestrian links. In here, we spend about 90% of this fund to take care of our existing trails and about 10% on new trails. So for next year, we've identified a couple sites that we plan to fill in some gaps along 100th Avenue from 108th Street to 110th Street, as well as 108th Street from 100th Avenue to 107th Avenue. So this would be kind of that gateway area that doesn't have a lot of pedestrian infrastructure at the moment. Rehabilitation of city-owned parking lots. This year we did some work at the South Fire Hall. We're looking for opportunities for next year. There's a number of parking lots that likely could use some attention. However, as we do with the inspection for or the fund for bridge maintenance and replacement, sometimes we may skip a year or do a very small project in order to build up that fund to do some larger projects. So we may or may not do one in 2022, depending on what some of the projects look like from a costing perspective. Moving on to existing roads. This is our rehabilitation fund that funds the majority of road work throughout the city that's not part of the former bypass. There's a few notable projects that we're looking to complete next year on arterial roads, including 100th Avenue from 98th Street to Landing Drive heading east. 84th Avenue from Resources to 100th, as well as the northbound lanes of 116th Street from 84th Avenue to 97th. And then the rest would be in largely neighborhoods doing collectors and local roads. For new construction design, this would be for the future construction of 84th Street on the east side of the city from 100th Avenue to 132nd Avenue, as well as the extension of 116th Avenue from 88th Street to 84th Street. And this project would look at the design and feasibility of that build. For the storm replacement and rehab program, this often dovetails with any of the road projects that we do to cover off the storm components of those projects. So 84th Avenue, there's a significant storm main in there that will likely be replacing as part of that project that will be funded from here. So moving on to machinery and equipment. For parks, There's the toolcat for $85,000. This is essentially a piece of equipment that can function as a loader, a dump truck, and whatever other attachments that we put on it that assist them in maintaining the trails and ball diamonds in that area. And the Toro mower for $151,000. Part of this is funded, so for the previous council would be well aware of ARTI, our artificial or a robotic lawnmower that we had for a couple years. Unfortunately, the manufacturer of that lawnmower was bought out, and there was a forced buyback where we had to sell that machine back to them. And we have a credit that we can use to buy something else. So that's essentially, this is allowing us to utilize that money to buy a lawnmower that we could include in our fleet. What we were intending to do with ARTI was provide and ARTI was the name that we gave the robotic lawnmower. What we intended to do is to provide a higher level of service at some of our sports fields by having the grass mowed more frequently and also at a lower height for essentially to allow for more competitive games of soccer, as we've often got feedback from the association that the grass is higher than what they would like. So what we would be doing in this case is that we would likely be dedicating this to some of our more high-profile buildings as well as the sports fields. For buildings and building improvements, the service center small scale combined heat and power unit. We've done some analysis on buildings of essentially all the facilities that the city owns for the suitability of CHP. And one that rose to the top is the service center for a 70 kilowatt combined cycle CHP unit. It would replace about a third of the electricity demand. It has a 5.8 year payback and would reduce GHG emissions by 9.3%. The Coca-Cola Center, this would be the installation of 1 megawatt of solar photovoltaic panels on the roof. It would offset about roughly half of the facility's electricity usage, as well as would mitigate 1,700 tons of CO2 with a payback of 10.8 years. The reason Coca-Cola Center rose to the top on this one is that it is structurally able to take the load of these panels, as well as essentially would make the most use of the grants available to us. And then moving on to other projects, so the Avondale Area Redevelopment Plan. I think this will get spoken to a little bit more later, but essentially we had a motion from the previous council to refer it to this budget for discussion. The intent was essentially to put some seed money out there in order to fulfill some of the opportunities in that area. The plan was created in conjunction with the school boards as well as the city and neighborhood stakeholders. For the Clean Energy Improvement Program, this program is set up to allow for residential and commercial building owners to upgrade their facilities for energy efficiency and allow them to pay that back over the useful life of the asset through property taxes. And it also allows the costs of the improvements to stay with the asset. So for example, if you did upgrades to your house, say solar panels, which have an estimated useful life of 20 years, you could amortize those costs over 20 years as part of your property taxes. And when you sold the house, it would transfer with the house. And the next owner would be responsible for picking up those costs. So the reason you see it in here is that the way that it works is the city would lend the money to the end user, and the end user pays it back through property taxes. So theoretically, it's a net zero. It's an in and an out on our end, but it does need to form part of the capital plan. And I believe our CFO will touch on that as well later. In the plans and studies, we have two for next year. One is updating and expanding the storm drainage master plan to include the rural service area that we took over through annexation. This would provide a thorough inventory of the city's drainage system, develop some computer modeling of the drainage, examine issues and the existing drainage system, as well as identify upgrades to mitigate any of the issues. The second study is the Bear Creek Corridor Study. This provides information about the creek corridor that covers the slope instability, erosion, floodplain mapping, the river morphology, and detailed outfall assessments. That's it.
Thanks, Director Glavin. Director Manuel.
Okay, thank you very much. So first up, we have the annual fire equipment replacement, and this is just life cycle replacement of large equipment purchases in alignment with the 20-year equipment life cycle plan at the fire department. We have $500,000 for affordable housing. Now this is to execute year 2 of the rental supplement program component of the 2021 to 2022 affordable housing strategy, which was adopted by council in March of 2021. The RCMP have requested $48,500 for training room modernizations. This would see the training room increase in capacity from 16 participants up to 26, and would see the replacement of furnishings and equipment that are in excess of 15 years old now. Additionally, the RCMP have requested $29,500 for the weapons storage system. This is a life cycle replacement of a platform that they use to store weapons at the detachment, and one they believe necessary. And for special projects, we have a intermunicipal project between the County of Grande Prairie and the MD of Greenview for a regional fire training facility. I believe that total expected cost of the facility is approximately $1 million, with the city contributing $250,000 to the cause. And that's it for PSS.
Thank you so much. All right. I now am going to, sorry, give me 1 second here. We're going to go to the fees and charges bylaw. We're going to go to referrals to budget. So, council, this is an opportunity for you to flag items, and I will manage this accordingly. I ask that you, we're going to go by department just to sort of keep it not all over the place. Then I'm going to go in the order as presented. So we're going to start with the Council and City Manager's Office, which was presented by Director Trim, and I'll combine that with Corporate Services as they were both presented by Director Trim. So basically get you in the queue and just flag items, and we'll come back and discuss those after everything's flagged. All right? So for sure, Councillor O'Connor.
I'm assuming that because these are overall budget numbers, what happens if there is an excess for any of the project, like a surplus or a deficit? How do you deal with that in the year? Because everything seems to be rounded numbers, not to the penny. So I'm just wondering, there must be some flexibility.
Ms. Whiteway, can you answer that?
Yes. Thank you, Mayor Clayton. So there's a couple things that administration does when it comes to capital projects. As you alluded to, they are budgets, so we do our best to estimate what the costs will be. So we constantly monitor those things. If there's surplus funds after a project, they are rolled into the funding for the next year's budget. Sure. So we would bring that back as a funding source to fund future capital. In deficit positions, we do have outlined in policy the ability to sometimes cover from related projects surpluses. So if a project had a surplus, another one had a deficit, we can internally manage that to ensure that we stay within that cap of $48.4 million. And finally, we do our quarterly updates to council that includes our capital projects, as well as a mid-year capital check-in. So if there is some extra funding that's available, it is an opportunity at that point for administration to recommend other capital plans.
Wonderful, thank you.
Sorry, before I go in the queue, Ms. Whiteway, can you also just reiterate the items that were referred to budget collectively as a list? Thanks.
Certainly, maybe I'll have this slide put up for this one. Okay, so throughout the year, there were 4 budget referrals. The first one was at the Protective and Social Services Committee meeting on February 2nd. The committee directed administration to further refine the scope of work, continue to pursue potential community partnerships, and to develop internal educational opportunities. And further move, the committee recommend council bring forward the Indigenous advisory position to the 2022 budget for deliberation. So this position has been included in the operating budget that you were presented today and as an ongoing addition beginning in 2022. The second item referred to budget was at the May 17th council meeting. The Grande Prairie Hospital Foundation brought forward a request for $500,000 to support the foundation's Key to Care capital campaign. Council deferred this item to fall deliberations for decision, and it has not been included in the budget that was presented today. At the November 9th Infrastructure and Economic Development Committee meeting, committee moved to bring forward a request of $75,000 to the 2022 deliberations to support the Richmond Industrial Revitalization Strategy. And this past Monday at council, there was $200,000 for economic development and recovery grants that was deferred to budget. Neither of those 2 last projects have been included in the budget. Thank you.
Thank you for that. And Councillor O'Connor, I had you first in the queue, but was it just for that question? Okay. Councillor Bosch.
Thank you. So this isn't to the last slide that you showed, so you have to forgive me if I don't know what I'm doing, but my question has to deal with the operating budget in regards to the corporate efficiency and strategic initiatives. So I have a couple questions to this, but it all ties in. So how many years ago did this start, and with how many staff is one set of questions. And I'm curious, what are the benefits that have been realized through this corporate efficiencies and strategic initiatives program? Initially, what's the payback been out of this this program? Because essentially, in my mind, you're supposed to work yourself out of a job in this kind of plan, right? You find the efficiencies, and the more efficiencies you find, it's like, I don't understand why you would need to keep going if you've already found, you know, the efficiencies that you've been looking for in years to date.
So, Councillor Bosch, I appreciate your question, and absolutely we'll get to that. For now, let's just go through and flag an item, and then we'll compile a list, and then we'll come back and discuss and ask questions, etc., on the items that you flag.
Okay.
Okay? So, you can have either, but just identify it.
That was the operating budget that I asked for?
Yeah.
But I guess you know my question already, so here we go.
There you go. Do you have any other items that you wish to flag in either corporate services?
Yes. In the budget comparison, can I ask about that?
Specifically,
it's for the operating grants.
Which page are you referring to, sir?
Pages 8 and 9.
Okay.
So my question is, according to these grants that you spoke of for the $6 million plus, on the next page when you do the expenditures, if these grants are supposed to be offset, why is there a $3 million difference, according to note 4 here? I don't understand that.
So just as a clarification, do you want to take that for now? CAO Galante.
Thank you, Madam Mayor. I suggest that we take notes of all the questions or flagged items. Some questions, the different directors or myself will have the answer like right away to respond. Some questions necessitates a little bit more, crafting the answer. So it depends how readily available the information is. We can then sweep the list, give you the answers we have at hand right now. And if we need some time to compile the answers, we'll recess for a few minutes and come back with the answers.
Okay. So continue with your questions, and they'll be made note of or flag the items you wish to flag.
Okay.
Anything else from corporate services?
The capital budget, page 15.
Okay.
I just have questions on this ERP system in regards to once, potentially, if you go ahead with this and this software is put in, what are the staffing implications to putting this system in? Are you going to reduce staff? Are you going to maintain the same staff? Or just some explanation on this program, please.
Okay. Anything else in the mayor's office or in corporate services? If not, I'll go to Councillor Thiessen.
Thank you very much, Mayor Clayton. As far as the things that I flagged here, I think Wendy already flagged the ERP system, procurement and implementation. I think it's a whole system as well. So things that I would flag for this, operational and capital, enterprise asset management implementation. I'd just like to know a little bit more of that and how it works with the ERP going forward, as well as increases and decreases in the operating budget for asset management and risk management on page 10 under Council and City Manager's Office. And then the last one that I have from these areas is corporate IT initiatives under capital tax. And I'd just like to know a bit more about the Skype versus the Microsoft Teams systems.
Okay. Is that it, Councillor Thiessen? Thanks. Councillor Lerners.
Yeah, thank you. Not sure exactly how that, if it's a question or not. I was just curious, when you come back, because one of all the discussions today, the big whale in the room was the gap, the infrastructure gap. And so I know you're just working through that process, but I'd be curious to see what you're going to be proposing for potential alternative funding sources for this gap, whether it's local improvement or area redevelopment plans or an Aquaterra model where they, something like that, where they look at roads and storm sewer and that kind of stuff. So that's kind of what I'm trying to, looking forward in the budget.
So CAO Galante, maybe a question, when will further discussion be happening on the infrastructure asset analysis and the gap?
I can respond that right now. So the intent today was to really put this on Council's radar, identify the gap, explain the first state of the infrastructure report. There are some tools we can use, like an infrastructure levy, which is being used quite frequently across Canada. We're in contact with Mississauga, London, Kelowna, etc. with the specifically determine a percentage of tax levy towards an infrastructure fund could be an option. We have reserves as well. We could analyze changing level of service in different asset classes. So when it's very good, like you see some assets are in very good shape, we can delay or move assets to a fair condition instead of good or very good. So there are a few tools. We can have a conversation today. I think the next step, instead of solidifying this, is to have a conversation with Council about adequate level of service for the different assets. And what is the appetite from Council? Is the status quo, or do you want to see some adjustments on that? And that may free up funding to move to priorities. So if roads priority, we can shift funding, reserves and other tools. So in January, I believe mid-January, there will be, as part of Council orientation, there will be a specific session that Pravin, I think he's online as well, is our asset management technical expert, will provide to Council, just to go deeper into the topic, and potentially at that time you will have more options. We're going to have a general conversation today, how to do that. One of the ideas is to start seeding funding into fund, right, slowly. But it's mostly for presentation to council, start thinking about that.
I guess that was my question. If we leave it for further analysis and recommendations, are we letting the train go? Are we able to still, or should we be doing something now, or is it that urgent, or is it timely to just figure out a process that actually makes sense and like Mayor Clayton says, to have something in the new year or in the next 6 months to figure out a plan how we're going to deal with that long term?
CEO Galante.
Thank you, Madam Mayor. Council may decide today to start executing some strategies, like the infrastructure levy. Absolutely. It's up to you to decide how to accelerate or wait into start funding and closing the infrastructure gap. So yeah, we'll be able to answer questions to the best of our knowledge today.
So, Councillor Learners, I guess what you're hearing is if you have intent to address the gap today, there is an opportunity. If you want to wait till the new year, you won't see any of the gap addressed in 2022.
I just wanted to hear that it wasn't a looming emergency that we needed to deal with right away. It's just something we recognized, and we're going to slay that dragon in the next little bit. As long as there's a plan and he's not sweating lots over there, I think I'm okay for this budget cycle.
Okay. Any other items you wish to flag under corporate services, Councillor Lenners?
Not at this time.
Okay. Councillor Blackmore.
I also had flagged the ERP and the Skype for Business, but I noticed in addition to that there was a line item for Sunrise House, $383,000 that was budgeted but not allocated and not spent. And I'm wondering where we're at with that.
Okay. Anything further? Okay. Councillor Thiessen.
Thank you very much, Mayor Clayton. Sorry, I was just going over the budget comparison, and I guess I had a couple questions, so I'm looking at page 8 again. One of my questions was on note 6. In the note 6, it says the increase is mainly due to a transfer from the financial expenditure reserve to maintain 2022 operating requirements. Based off the presentation, what I heard was capital requirements. So I'm just seeing, because that would be a bit unorthodox for us to transfer for operational requirements. So if it's capital and that's all I need, then I'd just like to hear that. The other one was under the line other revenue. So we have for 2021 $225,000, and then going forward for the next years, 2022 and on, it's $508,808. So I just want to know what that other revenue is. Is that sponsorship revenue from naming of facilities, or what that other revenue is? Just questions.
Ms. Whiteway, do you want to take the first one at a minimum? Thanks.
Thank you, Mayor Clayton. So just on the comment for the reserve transfer, so that would be for the capital tax strategy. And my apologies, it should be the future expenditure reserve. That's where we're transferring that one from. So it's just to answer that question.
Great.
Thank you.
And that's all I have in the queue for corporate services flags. So now I'm going to move to Director Miller's bucket. So community services, please. Any items that you wish to flag? Councillor Blackmore.
I would like to flag all of the Bennett's energy expenditures because I think they all kind of go together. And I'm also going to flag the robotic floor cleaner, the Eastlink pop-up kiosks, module cultural center tractor, and the Bennett winter tents.
Okay, so just to clarify, that would be Bonnet's Energy concession upgrade, the event chairs, the truss upgrade, the business study report, and the winter tents, rock room renovations.
Yes.
And then in addition, the kiosks and the robotic scrubber from the Eastlink Centers and the Community Knowledge Campus, correct?
And the tractor at Montrose Cultural Center.
The tractor at MCC. Okay. Whoever's keeping track has those. We're good. Okay. Next in the queue, Councillor Thiessen.
I looked at my director and he said no, because he knows this is what I do to him every time. and come here. And I love community services. Things I like to flag, if I could, since Gladys already took some of mine. I have the Heritage Discovery Center demolition. I'd like to know a bit more about that. I guess more specifically, how much of that fund is going to straight demolition, and how much is going to exhibit set up in the museum, and if there are savings that we might be able to achieve. The other ones I have here is, well, like last year, the Eastlink Center fitness equipment update, as well as the Leisure Center demolition. And I do have a question about something that is unfunded. I know that the previous council received a bit of an update on it before the new council got elected, but in regards to Bonnet's Energy Center and the door access system, I just like a little briefing on that, if I could, for the new council, as to why the delay and if there's a chance that we might be able to move it up forward with Aquaterra's construction schedule. And that's all I got. Thank you.
Councillor Bressie.
Great, thank you, Mayor Clayton. I would like to, I don't have questions about them, but about accessibility initiatives, but I would like to talk about them as a council. And then also, my apologies if this would fit better into another service area, but I would like to talk about the Hospital Foundation request. I think we owe them the courtesy to at least make sure that the new council's updated on what the request was and discussing it. I don't know if I'll support it, but I think we owe them that courtesy.
Okay. Councillor Bosch.
Thank you, Mayor. This leisure center demolition, I guess the question, Chris probably talked about it a little bit, but I guess timing. Is this year the year we need to put nearly $4 million into something like this? Probably because I don't know the history on this, so I would ask that. I do have another question about vehicle and equipment replacement. With so many vacancies and reduced hours, reduced staffing in 2020, has that affected what you will need for fleet reserve? Like, did we gain something like, because when we have reduced travel, turnover, facility closures, did we gain some time in 2020 on this subject? And the other one was, probably didn't say that just right, but the museum fire hall replacement, and I know you said this, but I think I missed it, Mr. Miller. Is that to move it or rebuild the fire hall replacement, 86,000?
So we can come back to that. That's flagged. Anything else? Okay. Councillor O'Toole.
Yeah, I don't know process here or not, but I'd like to add something to the list. Is that now or is that later?
Go for it.
I'd like to propose in the next 4-year budget, not this one, but recreational facility low cost and leave it as unfunded. And also skating rinks upgrades as well.
So that one's been addressed, and actually that one is in infrastructure and economic development. But if you want to, I'll come back to you. Okay, we'll flag that in the appropriate bucket. Councillor Berg, sorry, Councillor O'Toole, was that it for your items from community services? Councillor Berg.
Yeah, so a lot have already been mentioned, but the two that I want to flag. Eastlink Center pop-up kiosks, is there demand for these? And also the outdoor pool shelters for $80,000. I'm really curious as to what the design of these might be and look like, and how many.
Perfect. Councillor Thiessen, if you're all right, I'm going to jump in and add mine before we go to you for the third time. Okay. That was just addressed. The only one that hasn't been mentioned in regards to just an additional comment in fleet and equipment replacements, want to talk about the exploration and opportunity for leasing and what that looks like in regards to the replacement. Also would like to talk, flag the Creative Arts Center roof replacement. And I had one other one that wasn't identified. That was done. Sorry, give me 1 second. Nope, that's all my items. Everything else has been flagged. Councillor Thiessen.
Thank you very much, Mayor Clayton. I guess this one, you could probably splay it out all over the operating budget, but since we're just talking community services, I guess for me, I flagged Eastlink Center, Montrose Cultural Center, and Bonnet's Energy Center, all under community services, as there seems to be a significant drop in the operational funding that goes into that. In total, I think is $619,000 between 2022 and 2023, and then it's sustained. So I just want to understand that a bit better. Are we anticipating no growth coming through any of those facilities? Are we laying off a bunch of staff? Like, what does that look like? And also, I guess it'd be nice to have a comparator there too. So I don't know currently what the 2021 line was on any of those items for as expenses. So are we increasing our budget this year and then decreasing it the year after? From what it was in 21. So I'd just like to see that 2021 comparative and just have a bit more of an understanding going forward beyond 2022 for those facilities. Thank you.
Ms. Whiteway, would you like to do that now or when we come back?
Thank you, Mayor Clayton. I will just briefly touch on the revenue portion. So as discussed, we had to look at what the membership revenue, event revenue, those sorts of things was going to look like now in a pandemic state. So that was considered in the Eastlink Center budget as well as the Bonnett's budget with a decrease in revenue. But we can work on the particular comparisons to 2021 for you.
I'm just going to, because I don't think it was flagged, I'd like to flag the transit accessible shelters and bus stops. And as well, just I'll clarify with Councillor Bressi, did you flag accessibility initiatives? Perfect. For me, I would like more information in regards to what that looks like. Okay, I see nothing further in that bucket. I'll move to infrastructure and economic development. So just jump in the queue if there's items you wish to flag. Councillor Berg.
Yeah, so just two items here. The Coca-Cola Center solar, just curious about the entire life cycle of that. And South Bear Creek lighting replacements, is there demand for that with our long, beautiful summer nights?
Okay. Councillor Bressi.
Great, thank you. I'd like to flag the Avondale Area Redevelopment Plan implementation. Don't have questions about it, but there's a motion I'll be making about it eventually, if nobody beats me to it.
Okay. Councillor Blackmore.
Yeah, long list. I would like some more information about the land acquisition, just some more details of what's being acquired, why, where. The playground surface replacement, I'm wondering if we're moving away from sand. And I'm also wondering, at one time the tire recycling guys had a big fund of money that no one was using, and I wonder if any of it's still there. That's the provincial tire recycling guys. The Bear Creek lights, I'm just wondering if we're moving to LEDs. I'm curious about the Swanhaven rink replacement. I'm wondering if the bridge deck replacement is what shows up in the poor category of our, what was your report called? Yeah, asset management report. And 84th Street, the new construction and design, I'm wondering when we're looking at construction and completion of that project, or if it's budgeted or funded or anything. And that's it for infrastructure.
Thanks. Councillor Thiessen.
Thank you very much, Mayor Clayton. I'd like to flag Toro the mowers. Yeah, I just wanted to say Toro. But anyways, I'll flag the Toro mowers. The other one I'd like to hear a little bit more information about is, this is largely for the new council because I've had lots of discussions about this, so I'm pretty sure I understand how it works, but the Clean Energy Improvement Program, currently unfunded at $2,788,000. And from what I heard, we do have a plan to roll that into action. And the last one that I'd like to flag, just for ECDEV people, is the citywide incentives program at $200,000 that was requested and referred to budget before. So I just flagged that one.
Okay. Councillor Bosch.
Hi, I'd like to just ask the question for the Coca-Cola, the solar. What costs are we saving? So what are our power costs now? And if we're looking at 46% in reduction, I'm just curious how long it'll take to repay this input back. And then with the roads, and I'm not sure if this fits in here, but it goes to Horatio's comments about asset condition. So with the roads, what is the percentage of, partnerships with ATCO and Aquaterra putting funds into replacing some of our infrastructure? Like, how does that attach to what we put as a budget item? Does that make sense?
Replacement.
Yeah.
Yep. Okay, we can talk about that. Yep. Okay.
Thank you.
Councillor Bressie.
Great, thank you. One other thing that's not actually in the budget documents, but I'd like to get information about is the College Park ARP. There were some potential costs to the city with living up to that. I want to make sure we're living up to our side, so I want to have an update. Are we doing anything in College Park? And if we want to do something at College Park, what would that require in the budget?
I'll just jump in the queue quickly. As identified earlier, Councillor O'Toole, and I think it's flagged now, but wanted to talk about add in addition potential rinks, but I think the Swan-Even rink replacement, we can have a discussion there on that. I was looking for more information on the inspection programs in regards to how the ICF in collaboration on different programs that we're looking at with traffic lights, procurement, et cetera, are impacting that, if at all. In the service center small scale CHP, I just would like more information on that, the justification, and in comparison, how it'll be different or similar to the existing CHP we have. And then I had, I think that's just looking for further information on the outdoor park furniture and the city-owned parking lots, the rehabilitation on those. And if you will allow me, because I was busy trying to keep track of everybody else, I had one that I wanted to flag from corporate services, was the asset management operational costs. Just looking for more information, what that looks like. And to be clear, when we discuss anything that includes people, we will go into camera. So we'll group those together when we're in camera if it has impacts in regards to human hours, etc. And I think that's it for me. I see Councillor Thiessen. Is it for the next bucket or for this one?
I actually have nothing for the next bucket, Mayor Clayton, but I did have a couple extra things that I flagged here. I thought they were going to come up in the course of conversation. Pedestrian links. I know Councillor Bressie sent out an email and had a response on that. I'd just like to have that in the public. My question on pedestrian links is similar to what Councillor Bressie asked in his email, which was how many new connections, how much refurbished links are we doing here? So what is fixing up old sidewalks, or what is making those new pathway connections? And the other one is the tree replacement program. I'm flagging it not to take it away. Of course, you know me. I'm wearing green. I love trees. I hug them all the time. I want to know, is $95,000 enough to keep us on the same path of tree planting as we have been over the years, in spite of the cotton silage? And potentially, is there an opportunity for us to move that budget up a bit more? So, yeah, those are my questions. Thank you.
Perfect, thanks. Now we'll move into protective and social services. Any items that you wish to flag from there? Councillor Bosch.
Just one quick question about the training room. It was to increase more participants for RCMP training. Have we increased in RCMP officers or staffing in order to need this? Just a quick question on that.
We'll leave that one. It's an easy one to answer, but I see Councillor Blackmore.
I'm wondering where we're at with RCMP numbers, the same kind of thing. If we have more coming, if we're desperately trying to get more, I don't know. And I'm also curious about the Grande Prairie Fire Department training facility. Where is it, and is it going to return? Is there going to be any return on investment with that facility for us or any other government?
Which one was that? Sorry, Councillor Blackmore?
The Grande Prairie Fire Department training facility.
Okay, thanks. Training grounds, that one?
Training grounds.
Yep, okay, perfect.
And then Mayor Clayton, I also had like a general question for the whole operating budget. I don't know if I should ask it now or.
Yeah, just have it out there so in case it needs.
It would be really helpful to me if I knew what the full-time equivalent positions were for each of those lines, just to have an idea of where those 650 staff members are living.
Yeah, Ms. White, will just clarify, I recall some of that's in the Q3 updated, is it not? So it should be relatively easy to provide that information.
Well, yes, we do provide an FTE update in the quarter report, and it does make it a little more difficult due to casual and temporary positions for us to be able to put the exact number of FTEs. That's why we don't include it in budget. But the hours information as of for 2020 and 2021 were in the quarter 3 report to Corporate Services Committee.
So would you mind just highlighting that when we come back?
For sure.
Yeah. Thanks.
For me, it's still important for budget because it gives you some idea where there's flexibility or not.
For sure. Perfect. Anything else, Councillor Blackmore?
No, that's everything. Thank you.
Councillor Bressie.
Great, thank you. I just had a question that maybe isn't impacting this year, but it will be the next year, and I want to start thinking about it is eventually we're maybe going to be selling City on 99 and the CSD building, and I know that the operational savings of those are built into the coordinated care, but my understanding is that the capital proceeds of those aren't currently built in anywhere, and I wanted to make sure that my understanding was correct or be corrected if it's wrong.
Okay, I'm going to jump in here. Along the similar lines, I'm curious at a high level if Finance or Director Miller can tell me what the projected revenue streams look like in regards to sponsorships going forward with that new position being filled. I also had a question in regards to, and I don't remember what page it's on anymore, but could I get further explanation on COVID-19 pressures and that increase there? And then back to the Protective and Social Services. The only one I wanted to flag, it was in regards to affordable housing. Can I get an update on what the uptake to date is, and what the projected uptake is expected for going forward? And that's it for me for PSS. And anyone else? Okay, so now we take a break. CLT goes away, puts everything together that they can, comes back. Is 45 minutes good? See, okay, so do you want more? Yep. Okay, so I'm just looking at the time. I wonder, CEO Galante, if there's any value in doing the fees and charges bylaw, only because if that takes too long, maybe we'll be done for the day, so you can go away. It's your call.
Yeah, good idea. I think even fees and charges may trigger more questions. So if there are more questions on fees and charges, we will add to the list, and then perhaps we can just go away and work for tomorrow. Yeah. Good.
All right. So sorry to change the agenda, Ms. Karbaszewski. Thanks. Pardon me. Yes, we're going to take a 10-minute break, and then we'll come back and do our fees and charges bylaw. Thank you. 2, 1. Good afternoon and welcome back to the City of Grande Prairie 2022 budget deliberations. Next on our agenda is the fees and charges bylaw, and I'm going to turn that over to Ms. Whiteway for introduction.
Thank you, Mayor Clayton. So the fees and charges bylaw regulates the per unit cost of various goods and services that the City of Grande Prairie offers to the public. So every year, management reviews these costs to assess their reasonability, accuracy, and if new services and goods are being provided. Performing a detailed review also helps management to assess if the City of Grande Prairie is within industry standards, while also being aware of the local economy and if services provided by the city are aligned with council's priorities. So in your budget book, starting on page 83, is a summary of these changes from 2021's bylaw to the proposal for 2022. It is a detailed, extensive summary that's been developed to reflect 2022's operations. So the appendix in the budget book reflects the before goods and services tax rate changes being proposed for 2022. The draft bylaw attached to your agenda package is the rates including GST. I'd just like to make one slight correction. Under Multiplex Aquatics and Wellness, Eastlink Center, the North Concourse and Concourse South, that's the Synergy 180 Turf Combat Corner, rates should be at a per day, not per hour. So this is for a minimum of 4-hour booking, and this will be adjusted in the bylaw prior to council December 13th. Thank you.
All right, I'm going to open that up for discussion. As mentioned, it's in your budget book, page 84 on. Is there any items that council would like to flag to add it to our list of items that we will discuss tomorrow morning? Councillor O'Connor.
Yes, I'm just looking at the fees, and they seem to have gone up exponentially, and I'm just wondering what the reason for that is. Is there, like, am I reading this wrong? I know that one was changed to per day, but went from $60.60 up to $160 per hour, 0.6 per hour, sorry. Just wondering why such a large jump.
So, Director Miller, do you want to discuss it now, or would you like just to add it to the flagged items list?
I can, thanks, Mayor Clayton. I can provide a couple of details right now, if that's okay. In talking to Ms. Redding about that, what we have done now is we're including some equipment with these room rentals. So, so we increase the cost so it would cover the wear and tear on the equipment. And
Councillor Thiessen.
Yeah, thanks, Mayor Clayton. This is just a curiosity question. I apologize if I take up anybody's time, but under the drone use permit, it says nonprofit and profit. There's a rate, free for nonprofit, and there's a $50 charge for profit. What if you just bought a drone for fun and you want to fly it? Do you still need to get a permit?
Director Glavin.
Thank you, Mayor Clayton. Largely, it depends on the weight of the drone, whether or not you would need to be licensed or have a permit or not. I'm trying to remember the exact how many grams you're allowed to have before you need licensing, but this largely is impacting the larger commercial drones that do need licensing.
Okay, no, that's great. Thank you so much.
Councillor Blackmore.
I don't see anywhere where there's like just standard going swimming costs, or would they not be in this bylaw, like the standard amount you pay per month to use the Eastlink Center? I see the walking track special program at $2, which is being discontinued. I would like to argue about that, but generally I don't, under Multiplex Aquatics and Wellness, I don't see the just regular day user fees.
So, Director Miller, I'll get you to answer the question about day use, but let's flag the walking track item for discussion for tomorrow.
Sure.
Go ahead.
Sounds good. Thanks, Mayor Clayton. These are, Councillor Blackmore, these are just changes that we're proposing to council. So the other fees are in the the bylaw that would be adopted, I believe. So, and there's no adjustments to the Eastlink Center membership and a few of the
So
but a few of
for
the others.
information, could you bring those tomorrow just for the new counselors so they don't have to dig it out?
Sure.
Thank you.
Bet.
Just specifically the Eastlink monthly drop-in fees. CAO Galante?
Madam Mayor, for council's convenience, we can circulate the full bylaw.
Perfect.
Tonight or later on in the afternoon. So you will see all the existing memberships. These are the changes.
Well, and I can access it online, I know, so.
It'll be easier.
Okay, so Councillor Blackmore, you're fine? Okay. Councillor Thiessen.
Thank you very much, Mayor Clayton. I suppose this one will go right back to Director Miller. Under the Activity Center drop-in admission, it says under 2 years is free, which is great, but I don't know if they're going to be dropping in by themselves. Is there an opportunity for us to maybe look at this and consider perhaps an under 12 years as free, considering that this activity center was largely proposed for youth in the east side area?
So if I could ask Director Miller that we flag drop-in charges for the activity center for discussion tomorrow?
And more specifically for youth.
Okay. Councillor Lerners.
Yeah, I'm just I'm curious if we're just including things that are changing, and I'm looking at the planning and development fee structures, and it seems to me a lot of those are staying the same. So just curious why they'd be. And then there seems to be, and maybe they can explain to me why there's on page 90 and 91, it seems to be either some duplicates or there's some subtlety differences that I don't understand. Maybe they could explain to me what it just seems like it's repetitive. Not that that's a big deal if that's all it is, but then where are also building and development permit fees and how are they, what are those fees and are they included typically in this and are they changing?
Okay, so we'll flag that for tomorrow, Director Glavin. Okay, I'm just going to jump in before you, go ahead, Councillor Bressie.
Great, thank you. Just with us raising some of our recreation and sports fees, I just wanted to get an update on our recreation access program and how subscribed that is and just making sure that we are still confident we've got enough money in that to continue to fully fund the families that need funding as we raise some of these fees.
I also had a question in regards to cemetery and parks operation in the strategy or approach of the ones that are increased. Some appear to be 10% increase, some seem to be random increases. I'm just curious on the approach of, was it really specific because we costed out the expense of that item and increased it accordingly, or what was the strategy there? If you could let me know that tomorrow is fine. Councillor Berg.
Yeah, actually, as a follow-up to Councillor Lehner's question, on page 90 where it says ad fee, and then there is no ad fee going forward. Is that because we don't have a newspaper anymore, or is that abbreviated for admin fee?
Director Glavin.
Thank you, Mayor Clayton. Yes, the reason why we took that fee out is not having the DHT, which used to be a requirement for us to advertise in.
Okay. I had one more, if I could just get some further explanation on the Twin Ice Arena, speed skating oval. I'm assuming that's the outdoor facility. Why the increase for the lights for $15 to $50? And any other questions for flagging for fees and charges by law? Councillor Blackmore.
I was kind of thinking you were going to mention this, Mayor Clayton, that the disinterment opening and closing went from 400 to 2,000, or from 700 to 3,000. I'm kind of curious why that's such a
Yeah, so cemeteries as a whole, I would just like.
Yeah.
Yeah, for sure. Absolutely. Anyone else in any items to flag for discussion tomorrow in regards to fees and charges by law? Okay, so now I'm going to move off of that item. I'm going to quickly go around the table in case I know this was a fast process and a new process for many. I'm just going to make sure that I'll give you a couple minutes to review your lists in case there was any items of concern that you wanted to flag for discussion tomorrow. And following that, we will adjourn for today. First thing tomorrow morning at 9 a.m., we will do our in-camera discussion. So any items that were flagged that actually needed to be discussed in camera will be discussed collectively at 9 a.m. tomorrow. And then we will move on to the updates, so the items that were flagged out of camera, the other items. So if anybody has any items, I'm just going to review my list quickly, but jump in the queue. Councillor Berg.
Yeah, just one question again, and this is a rookie question. With CIBC Wood Gundy, they were showing $115 million in investments. Would that be considered our municipal reserves?
Ms. Whiteway?
Thank you, Mayor Clayton. So that is a portion. Our reserves are fully funded via investments, but of course we do balance our cash using our investments with CIBC as well. So sometimes our unspent or deferred grant revenue would also be in there. So there's some other items on top of that.
Okay. I had one, Councillor Lerners.
So I've two questions, and I think it's called the Fletcher Building here that's right beside us here. What's our commitment to that, and is it any of the funds that are needed for that takeover or lease or whatever, are those included? I need just a little historical background, and then I'm not sure under protective services. I saw a bunch of revenues and expenses and all that, but I would like to see some kind of a breakdown on the photo radar revenue and expenses and those kinds of things.
Okay, so Director Manuel, do you want to maybe give an update in regards to the facility next door, and then I'll address the photo radar in a second.
Certainly. So in regard to Fletcher, there's no ongoing commitment from the city at this point outside of the city did provide an economic stimulus grant, which has conditions tied to it. So ultimately, there is timelines associated to that and certain work being completed, which if it wasn't, you would see those funds returned to the city. Outside of that, any operating dollars are through provincial grant funding programs, which are outside of this operating budget.
Okay, thank you.
So, Ms. Whiteway, did you want to touch on photo radar revenue? Director Emanuel, do you want to bring back additional information tomorrow as an item that's flagged for discussion?
So what I can speak to is in the city budget, we don't separate out photo radar revenues from conventional traffic enforcement revenues. They're all kind of lumped together as one pool. But certainly we can try to provide some more detailed information about that, certainly around the total pot of traffic enforcement revenues.
Thank you.
Will that work, Councillor Lerners? Okay, Councillor Bressie.
Great. My apologies if it already got flagged, but I don't recall hearing it. I do think there's a bit of business council needs to do around the Indigenous liaison position, so I'd like to make sure we talk about that.
Okay. So we'll flag that item. I don't see anybody else in the queue. I just want to check my list. All right. Okay, I see no one else in the queue. I don't know if CAO Galante or CLT has any other clarification points or anything that you need for today. So seeing nothing, we'll see you here tomorrow morning at 9 a.m. And if you're joining online, thanks for joining us. We'll see you tomorrow.